Yo, what's up, everybody? How we doing? Happy Hump Day. It's
Hump
Wednesday.
Day.
It's Wednesday. I'm Spencer. There's Aaron. How we doing today? Markets are up. Tiny Pie, yes, that is the cost crocodile. On today's show, we are going to talk about the crocodile of Wall Street. What or who is that? Well, we will talk about it.
I mean, this was a crazy story that broke yesterday.
It broke during the show, I think, so we didn't really have time to talk.
I mentioned it, but we didn't at the time.
Yeah.
Did not know who the suspects.
Yeah, persons of
not even suspects. The culprits.
Yeah, the arrestees. What is the legal term for this? We should know this.
Defendants.
Defendants. They're not being
The
sued.
Accused. Either way,
That's it.
Interesting people. We'll get more into that later in the show. Yeah, let us know in the chat what stocks y'all are watching. I know I've got my stocks that I've opened trades on. I set some stop losses. We can go over those in a second too. Roku ones I'm watching heavily right now.
We got a lot to get to today. We have to talk about the stocks that Bill Ackman owns because we were going to do that yesterday and we forgot. We are going to talk about Disney. I got some really good stuff over from our friends at Visible Alpha. They're going to share. They did some research for us on Disney Plus's growth. We're going to talk about that because they report earnings tonight. We're going to talk about what else? Why the market is higher. Why is the market higher today? Do we care if there is a reason?
We should talk about that because yesterday we saw that 10-year bond notes reach their highest point since 2019, I believe, before the pandemic, and all the markets are still up. So we may have to throw out this notion that every time the bond yield ticks up, that means stocks have to get hit, and especially growth stocks. I mean, I think when we were in the environment of literally zero interest rates, whatever, then any small hike in the bond yield in interest rates would affect stocks. But now that we're getting toward a more normal recovered economy, I don't think we have to subscribe to this idea that every single time a 10-year bond ticks up, that growth has to get hit.
Today would certainly seem to.
I don't even know. I haven't looked at the bond markets yet.
Oh,
or
me neither.
Are they still going up?
I should probably check before I comment. I assumed they were because they have been, but
I did reach out to a bond economics expert,
the Bond King,
who will be joining us. I don't know.
You know what we should do on this show? I would love for someone to come on and explain the bond market to me like I'm 5.
Yeah, that's what this guy will do.
I need him to be as dumber than he thinks he needs to be. Be dumber than that.
Well. I mean, in a simplified sense, from a macro econ standpoint, it's essentially if the Fed's trying to heat up the economy, try to encourage investments, they'll lower the bond rates. If they're trying to cool down the economy, they'll raise the bond rates. But now, I mean, the Fed's, it's gotten to a point where obviously with inflation, they need to do something, and what that something is what they've only know how to do, which is raise and lower rates. But right now, there are a lot of people saying, it might not be the best time to raise rates. There are actually signs that, investments are picking back up and the economy, spending's up, all these things, that raising a rate could hit some of this natural recovery that's going on right now. We can, I'll bring up some data and we can talk more about this later in the show, but let's go ahead, roll the intro again. Let us know in the chat. I'm seeing some tickers out there, BKKT.
Before I roll the intro, who are we talking to? We got Jesse Kaler on at 1 o'clock.
Yeah, we got Ben Rasbada from Story Trading or Story Investing at noon. We might be getting a Cowboy from Simba Bets, talk about some Super Bowl bets.
If we can't get a Cowboy today, we should definitely get him on before.
Yeah, either Thursday or Friday, for sure.
All right, let's roll that intro. This is Benzinga Live. Hit that like button. Let's roll. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How are we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have
breaking news.
All right. right. Let's bring up my Benzinga Pro. Let's go off of Peloton for a second, and let's just go to the overall market. Look at my watch list. It's got the major indexes and the FANG stocks, and it's all green. Everything is up. Even energy is up today. When is the last time that energy was up, that oil was up on the same day that the rest of the market was up with it? I feel like it hasn't happened in months, I feel like.
Yep, and I'm pulling up the Benzinga Live AB portfolio. Having a great day.
Oh, vacation is still on.
Still on. I'm holding right now these Roku calls that are up about 200%. Baba calls up 70%. I got into a TQQ call yesterday.
TQQQQ.
Yeah. What I just gave it 2 Qs.
I don't know.
I don't think I got the 3rd Q in there.
I don't know.
But I did set some. You can see up here. I have these pending orders to close my calls on Roku and Baba. So if they end up dropping from here, I'll be able to get out still with a nice gain. But yeah, I mean, like you said, Spencer, just everything green on the watch list. I'm having fun watching these positions go up. I'm looking for.
Me too.
Yeah. I mean, it just looks like Roku is. Let me give this a refresh because that's not what the chart really looks like today. There we go. Yeah, I mean, it doesn't look like Roku. I mean, let's pull this back out, see where we could potentially. Yeah, so it looks like we could run into some resistance at 166. But if we break through there, then 167, then 185 are really our next point. So Roku's one we've been watching. One that I gave out a couple weeks ago, and this was one that I'll pull up the Benzinga Insider Trades page too, because I think this is always something fun to watch, especially in the past month or so when we've seen markets draw down a little bit. A lot of these insider buyers, that's when you'll see them come in, right? When these stocks are down 10, 20%, they'll say, hey, this is a good deal. So we were looking at Asana because Asana CEO Dustin Moskovitz has added like some ridiculous amount of shares. But Asana,
it's impressive.
I know. Asana, I don't even know where he gets all the money from, but I guess he's from Facebook. He's a billionaire from Facebook, and he started Asana in like 08, 09. And Asana was up like 10% yesterday. And I'm in the stock. I added it to my long-term portfolio, to my Roth. It's not in my Robinhood. But it was up like 10% yesterday. I was like, okay, this is the breakout I've been looking for. I was looking at some calls, but I was like, oh, I'm going to let this cool down a sec. Like, I don't know. And now it's up another 10%. So it was up 10% yesterday. It's up 9% right now, but it looks like it's continuing to break out. If we get above 60, I think that'll be, which we're at 60 right now, kind of a psychological level. So just something to watch out for, Asana. And looking at this like chart on a long term, I mean, I know it's up 20% in the last 2 days. So of course, am I expecting it to kind of draw back a little bit? Sure, or cool down, of course. But at the end of the day, this was an $80 stock in December, which was 2 months ago, and it's still only $60. So I don't think the run is over for Asana. Again, up 20% the past 2 days. So just throwing that out there. Maybe not the perfect time to get into it, but I'm still looking at this as a swing trade.
Yeah, okay, the key word was the very end of that, which was swing trade. I think if you are looking to build medium to long-term positions in things, now is a great time to dip your toe in the water, do some buying. If you're trying to do some quick hit stuff, some short-term stuff, I would not be chasing anything up here. I would not be buying Asana today to make a quick profit for the next 1, 2 to 3 days.
No, I mean, look at the price action. This is the last week. It's up 25% over the last week.
Yeah.
So, right, like anytime a stock moves that much in that short of a time, it's likely that there may be some sort of pullback. But we switched the time frame to 3 months. It's down 56% over the last 3 months. So it's still well off of what I would consider a fair value. And Spencer, remind me in a couple weeks maybe that if Asana keeps ripping, that it's not in my Roth as a long-term forever hold. It's in there as a swing trade. So I might want to sell some in my Roth at some point.
Okay, the fact that you even have things in your Roth that are not forever holds.
I don't know. This is the first.
I'm not going to lie to you. That concerns me.
Well,
that concerns me a little bit.
I realized that
the purpose of the. Okay,
I know, but you can trade within the Roth as long as you don't pull out the money, so you can still trade like tax free in the Roth.
Okay.
And what I realized was my biggest position in my Roth was Nvidia, which I added more than a year ago, like before the stock split. And at one point, my Nvidia position in my Roth was up more than like 160%. And in hindsight, I wish I would have sold some of it and moved it into other things, even though Nvidia is in that long-term hold forever category for me. I don't know if I see I don't see Asana the same way as I see Nvidia. I don't think like, oh, what they're doing is changing the war, whatever. But like, I thought it was undervalued. I thought the stock should come back up.
Okay.
And I thought it was a good sign that the CEO was buying.
Wait, Asana, they report earnings a month from today.
Yeah.
Just so you know that it's March 9th.
All right.
So should I remind you? Should I remind you before or after March 9th?
I don't know. Let's do it after. Let's ride with it.
All right.
All right. So here's the Benzinga Insiders trade page. We're looking right here at.
Wait, can you tell us how to get there real fast? Because this is free, by the way.
Yeah.
This is free for everyone.
I literally just Googled Benzinga Insider Trades.
Boom.
And then hit the top thing. There's probably a better way. You can go to benzinga.com/SEC/insider trades. But what I like to do is I like to put a filter on here. So that way I can see like, okay, what's happened in the last week or since the last time I checked. So we're going to go from the 2nd of February to today, which is the 9th, 2022. Search. And then I'm going to sort by size. So I'm going to see what the biggest moves have been made in the past week or so. Silver Spike Investment Corp. I've never heard of this, but the CFO and the CEO have each added more than $60 million at $14 a share. That to me, I mean, like I said, I've never heard of this, but now I want to check it out. Now I want to see maybe why are they adding. Oh, and here's our good friend Dustin Moskovitz from Asana continuing to. I mean, let's just do this real quick because I do want to go through some of these other buys that have happened in the past week or so, especially some of these bigger ones. But if I just click on Asana right here, I mean, Spencer, look at this.
Okay, I'm looking. Where am I looking?
You're looking? All right, so
Yeah.
let's look over here at the filing date and the size. So all right, so it looks like he's been adding back since like October, maybe even before then.
Wait,
June.
this is not in chronological order. Can you sort by?
So you want the date?
Can you sort by date? Yeah, it's more. Okay,
All
and then
right.
I just want to we can ignore the whites in there.
Yeah, because they're not Dustin Moskovitz.
Right, exactly. So look at how many. We've done this exercise before, but how many times in the last call it? 12
I know,
months?
but like I think he's added since the last time we've done this. February 4th. That was last week.
That was last week. Yeah.
So $60 million, $61 million. Call that 120. 67. We'll call that 170. Another 42. We're at 210.
Chump change. This is chump change.
300 million. I mean, dude, he's put $300 million of cash into, and that's what I think is interesting right now. Now that we're sitting at $60.
Well,
I mean, look, he was adding at 60. He was adding at 63. He was adding at 63. So that's telling me he doesn't think 60. That's not his price target here. He doesn't think 60 is the ceiling essentially.
Now, in fairness to not in fairness, but like we don't know where this is coming from. We don't know his life. For all we know, I guess we could look this up. But like, is he selling Facebook? Like, is he just funneling money out of Facebook into Asana? Now that's a metric. That's something that we can look up in that tool. But we don't know. There's a lot of questions. We don't know. The bottom line is he's just been doubling, tripling down on his own company, which I'd rather have that than
the opposite.
Than Adam Aaron.
Which this is well documented, but Zuckerberg had been selling shares of Facebook.
He had been
consistently.
It's a pre-planned sale. He announced it 2 years ago. The Zuckerberg Chan initiative. I am all for shitting on Zuckerberg, but this has been in the works for years now, so it's not necessarily indicative of his bearishness in his own company. So let's just slow down on that.
Well, those are basically my thoughts on Asana. I mean, the CEO Dustin Moskovitz adding those shares, that was something that perked up my radar, got me to look at the stock more closely, and there were other things that I liked about it, including increasing revenue quarter over quarter, just good signs of growth. The stock had gotten to a point where I was like, look, I mean, it's just getting even in a market that is getting punished, it was getting over punished, right? I mean, so
yeah.
I don't know. I'm not, like I said, I'm not even swinging this. I'm not even trading this on options right now. I'm not going out there today going to buy calls or whatever. But if tomorrow it's down well, I guess tomorrow we have inflation stuff too. So, but at some point, if it's down 4 or 5% in a day, then maybe I'd start looking to add some calls. Yeah, Ahmad's saying he's got $15 billion. That does put it into perspective, because I'm like, this guy's throwing so much money in there, and you look at how much money he has, and it's like, it's not that much for him.
Chump change.
Yeah, it's like me, throwing some more into ETH when it, like $10 into ETH when it goes down a little bit.
That's right. $10 to you is $1 million to him. I don't know. Can we talk about the crocodile now?
Yeah, let's do it.
Okay. Again, as Aaron said, we did mention this briefly on yesterday's show, but I didn't have time to look into it until after we were done here. And then, Aaron, you sent me some pretty funny things last night. The crocodile of Wall Street, Razzle Khan. This is the person that apparently stole, and this is, I say apparently, maybe I should say allegedly, right? This is the person that the U.S. government is alleging had a role in stealing $4.5 billion worth of Bitcoin. 4.5 billion, I'm sorry, 4.6 billion dollars worth of Bitcoin. Heather Morgan is her name, and then her partner, Ilya Lichtenstein. How does anyone steal that amount of money right there? That amount of Bitcoin. And also, like, the more you read about this person, you can't really read about Ilya because he has a lower profile. I saw he has like a LinkedIn. It says he went to Y Combinator and he graduated and he started a business. But she's out there. She's on YouTube under the name RazzleCon. She's on Forbes. She's a contributor to Forbes, which is, anyone can be a contributor to Forbes. But she wrote some weird stuff. Can I read you some of these headlines from her Forbes articles? All right. I don't know if weird is the right word, but just interesting when you consider the fact that she's apparently... I
saw her Forbes bio as a contributor, and it was like expert in persuasion and game theory. It's such a...
I'll read it to you.
Slimy...
I'll read it to you. This is from the About page. Heather R. Morgan was a contributor between 2017 and 2021. Her most recent bio, she, quote, is an international economist, serial entrepreneur, and investor in B2B software companies. She's an expert in persuasion, social engineering, I bet she is, and game theory.
Those are all three such big red flags.
She is the co-founder and CEO of NPass, which uses artificial intelligence, another red flag, to automate identity verification while proactively detecting fraud. Interesting. When she's not reverse engineering black markets to think of better ways to combat fraud and cybercrime, she enjoys rapping and designing streetwear fashion.
Combating cybercrime. And she was the head of the mastermind behind a heist.
They're not alleging that she stole the Bitcoin. They're alleging that her and this Ilya Lichtenstein guy had a role, though that role is unclear exactly, in stealing $4.6 billion worth of Bitcoin.
Yeah, Thomas Mueller. If anyone ever says they're an expert in persuasion and social engineering
and game theory,
it's like where'd you go to school? Like the place for like evil,
the toilet store?
I don't know. Like it's like if you want to be like the villain in a Bond movie.
Yeah.
You want to be a social engineer.
Yeah, I don't know.
But what I no, okay, wait, go ahead. I want to talk.
Like this was built. This was built for the memes. This entire story feels like someone entered it into a meme generator, and then this is what they spit out. This is like you literally could not make this thing up. This story is what every TradFi traditional finance person. This is what every boomer thinks crypto is, right? This YouTube rapper lady and her partner who allegedly stole $4.6 billion worth of Bitcoin. See, it's not secure, is what they say. It's just like this, like crypto, has had a hard time getting itself taken seriously. This is why. Look at this craziness. What were you gonna say?
I was gonna say I think outside of how funny and like crazy this story is, it should be worth talking about, like the use case of Bitcoin. I feel like that's one of the things thrown out there by Bitcoin proponents all the time, is that it's good for like anonymous money transfers and money laundering. And I mean at the end of the day, like that was the original use case for Bitcoin, was the Silk Road and
that worked out well.
And the point that
that worked out really well.
Well, the whole point was, okay, if I'm gonna buy, say I'm on the say it's 2013 or whatever, 9-10 years ago, and I was on the black market, what's it called, dark web. I was on the dark web trying to buy weed. And
wait, you were?
No, I'm saying hypothetically.
Sorry.
And I could like put in my credit card that's like connected to my bank and my name, or I could send some Bitcoin that's connected to nothing. Like that was the original use case, right? Was okay, here on the Silk Road on the dark web, you can use Bitcoin, you can use crypto. It's untraceable. But now these heists, like it's all on the public blockchain, and then they can use the addresses to somehow trace them back and find these people. I feel like it takes away from that use case of Bitcoin's anonymity.
Yeah.
Spencer always helps me with words.
Yeah. Oh, wait. Happy is asking a good question about the money being returned. That's a great question, Happy. We don't really know the answer to that yet. So the government did seize almost 120,000 Bitcoin. For whatever it's worth, Heather Morgan is out on bail. She was granted bail.
Did she pay the bail in Bitcoin?
Hey, he'll be here all week, folks. I don't actually know. She was granted bail yesterday. She's out on, the bond was $3 million. She's under house arrest at her parents. His bail.
Wait, she has 3.5 billion, but she still lives with her parents?
Well, I think that's where they made her go.
Uh-oh.
His bail was set at $5 million. So
does look like I'm losing some capital here on Roku coming down.
And yes, I see those comments in the chat. There's dirty. All money is dirty money, right? You guys ever seen? I forget what it's called now. There's that documentary series on Netflix. I think it might be called Dirty Money, actually, which is just about financial scandals. All money, all currency is dirty. And then to the people that say, see, like this wasn't like Bitcoin is still secure. It's just the platform that wasn't secure. It just goes to show that nothing is secure, even if you say it is. It's not. I think the story was made for the internet. Frankly, I just thought this was like the funniest thing that I'd seen all year, which is not saying a whole lot, I guess. But I can't wait to learn more about Heather Morgan. And if you need to listen to her rap, I'm gonna put it in the chat right now. It's called Versace Bedouin official music video 2019. This is your Bitcoin mastermind right here. Where's my chat? There it is. This is your Bitcoin mastermind.
Yeah.
That girl right there.
Silver on my fingers and boots on my feet.
Come on, I can't be the only one that thinks this is crazy.
Email me. Fuck your message.
Oh shit. Sorry guys. Sorry guys.
Yeah, I mean, I'm sure we'll get more developments out of this story, more memes, more importantly. Like you said, Spencer, just like a made-for-internet story.
Anyway, nothing is secure. All money is dirty. Can't stop bad actors. You can try. I guess you can stop bad actors in some ways, but there will always be bad actors doing bad things with currency. Let's move on here.
I do see... Wait, I gotta check my phone real quick. Make sure I told Ben the right time. I think he's coming on at 12.
Okay. And so I saw someone in the chat saying that she's just like the fall girl. Yeah, I mean, heck,
if you put out YouTube videos like that and TikTok. We didn't even discuss the TikTok I sent Spencer last night. It was of her like It was basically she was like, here's a mantra I learned in Silicon Valley. And it was, what was it? It was like,
she was like
eliminate, delegate, And it's like, okay, if you're taking like life advice from like entrepreneur and delegate is one of like the 3 things. It's like, oh, don't actually work.
Wait.
Find people to do the work that you should do instead. Like that's just terrible advice. She literally in this thing was like, this is the mantra I live by. And
Okay.
33% of it was delegate.
How I built a multi-million-dollar business in my 20s was 0 outside funding. Don't know about that.
0 outside funding.
She had no connections, no trust fund, and is not an Ivy Leaguer. Let's see what her advice is. She met with some billionaire tech executives, though she did not say who, to that taught her a simple framework: automate, eliminate, delegate, and then hack. And no, that last part was not in there.
All right, automate, eliminate, delegate. So basically,
Sounds good on paper.
yeah, basically automate so you don't have to hire like not real people that you have to pay wages to can do those jobs. We can find softwares and robots that can do that for us.
Yeah.
Delegate. So for the stuff that robots and AI can't do,
You don't
find
do-
other people
find
to
other
do it
people
for
to do it for you.
And what was the
Okay.
other one? Eliminate.
Yeah, automate, eliminate, delegate.
And any like criticism or anything negative in your life, just eliminate. And there you go. That's all you
it.
need.
I just can't believe it. And like, yeah, what if this just like, to the people out there that are like Bitcoin is a giant Ponzi scheme, this is certainly helping that argument. Like, I don't know, maybe this whole thing is a gigantic Ponzi scheme. I have no idea.
Yeah, and then so we are bringing Ben on from Story Trading here in a few
Yes,
minutes. We're going to talk about
excellent.
Rumble. We're going to talk about some other stocks. Maybe do a check-in back on AEHR.
I'm ready to rumble.
Yeah, let's get that. I did see someone in the chat. I don't think they mentioned it in this context, but they mentioned Pelosi, so we should talk about the new stock trading ban. I was gonna say after Ben, but we could touch on it real quick.
Yeah.
But I'm encouraged by it. Look, I mean, you have this issue that was once kind of owned by not Democrats but progressives, and is now it's kind of like the horseshoe theory, right? I think you have people on like the far left and far right that are both like, yeah, that's bullshit. Like, Congress people shouldn't be able to trade stocks, and a bunch of people in the middle that have been like establishment Republicans and Democrats haven't really cared about it.
You got the liberals, the conservatives, and as you get more radical, you get closer together, right?
Yeah, exactly.
Yeah.
So I think it's people that are more on the on the kind of like far ends of either side are coming together and saying this is not something that should happen. Nancy Pelosi came out and said she supports this, which of course she's been the one that has gotten like the most flack as a trader. Although we should look at this graphic from and we'll do this when we talk about this more after Ben, but from Unusual Whales, who, credit to him, I think this like I don't think this happens without Unusual Whales. Unusual Whales really kicked off a lot of this scrutiny and movement to look at what but the funniest thing to me is like Pelosi has gotten obviously like this huge flack for being like a great trader. I think it's because she's the most famous out of all these politicians. But looking at the chart of the different politicians, Pelosi's not even like in the top 5 of like top performers.
She's not even good at it.
No, 1, 2, 3, 4, 5. She's 6th.
Oh, really?
So we'll take a look at this after Ben.
We'll talk more about this. My take, honestly, is like this is cool. This is good. Congressmen should not be allowed to trade stocks, but also like on the spectrum of problems that we have in this country, this is so far down the list of things that matter. Is that a hot take? This is so far down the list of things. We have so many bigger problems than congressmen insider trading.
Yeah,
Right.
I would say money in politics is a way bigger issue, and this is kind of a like schism, like a small sliver of that, right?
Okay.
I mean, think about it.
Slice. This is
If you're, I mean, there was just a story today about some guy that resigned because he was a big shareholder in like Pfizer and BioNTech, and he was like a proponent of vaccines, whatever. Bottom line is, if you're a big shareholder, like say your portfolio is 50% NVIDIA and you're a congressperson, like the idea is that some of those decisions, but it's the same idea that, okay, if you're tied to donors that have a lot of money, it's going to drive your decisions. So it is the bigger issue of just money influencing politics and policies in general. But within that, I don't think the insider trading thing is the biggest issue of that. It's more just like super PACs.
Super PACs are evil. All right, let's bring Ben on the show right now. Let's see what's on his radar today. Let's give Ben the special intro. And first guest of the day coming up right now. Ben, how we doing?
What's up? How you doing, Spencer? Good to see you. Hi, Aaron.
Ben, it's been too long.
It's been a while. We've been busy publishing a bunch of articles through Benzinga, but I haven't been on the show in a while, so glad to be back.
Well, we're still here. We're at our desk doing our thing, watching the markets. What are you watching out there?
Wow. Well, you know what? It's been kind of a inflection week for me personally in my trading portfolio.
Oh, tell us why.
My largest position has been Rumble CFVI for since the merger was announced with that SPAC. It's been about 2 months. I've just been holding it. And last week, I identified an inflection, and I was like doubling down. I was all over social media telling people the inflection point's here, get into the stock now. So, I mean, the stock's up, I don't know, at least 40% this year, and it turned my trading account into the green.
What was the inflection point that you saw last week?
So I do have a bunch of slides I do want to go through, but just generally speaking, I mean, you know, the story trading method is looking at the 4 pillars. So we're looking at sentiment, catalyst, technicals, and fundamentals. So I'm looking at everything. And there was just a lot of different factors coming in together. Last week, before the Joe Rogan incident already, there was record metrics that were shared by the company, which we kind of knew was coming because I'm looking at app ranking data. I'm looking at early January, a lot of traffic coming in to the site. So they released record metrics, 10.8 billion minutes watched in January, 39 million monthly active users. So that already started causing the stock to decouple from DWAC because it's been tied to the hip with DWAC. And since that press release, and even a couple days before Joe Rogan, you started seeing the performance diverge as people are starting to understand that this is a stock that has the sentiment benefit of a DWAC, but it also has great fundamentals behind it. So that's why I love this position. It's my largest position.
So you saw the app, the activity on the Rumble app, but that is only one pillar. That's one of the 4 pillars. So
that's one of the 4 pillars.
What else did you see?
So, you know, maybe right now what I'll do is share a few slides I have over here. And,
yes, please.
Sure. Let's see here. Okay.
There we go.
All right. Quick disclaimer. I'm not a financial advisor, so let's move on from that. So this is Rumble. So for those of you who are not familiar, it's a SPAC that Cantor Fitzgerald sponsored. It's CFVI. Last trade $16. The valuation was at $2.1 million at $10. That's an implied market cap after all the new shares are issued at $3.36 billion at roughly today's price. So what we try to do,
that's a large valuation. $3.6 billion for a company this young, but all right.
Yeah, well, I'll show you some metrics. I think it's worth at least double that right now, or at least $5 billion. So
let's hear it.
All right. So here's the chart, and you can see here, it had the initial pop, then you had a pullback, and you had this move here in early January when Trump started streaming some stuff, and then most recently, we know what's been happening. So trying to understand the chart based on these 4 pillars: sentiment, catalyst, fundamentals, and technicals. So fundamentals, I said, it could be worth double. Here's some slides I'm going to show you from the Cantor Fitzgerald deck. I also did my own research correlating monthly active users with market cap. And I'm at a 39 million, I think is what they just reported. We'll show it in a second. At 39 million, you can make an argument it's worth at least 5 billion comparing it to other social media companies. And of course, you can discount that because it's not fully monetized yet, but you can maybe add a premium back because of the very high growth and consider it a wash. That's how I'm looking at it. So I think this stock, before any of the Joe Rogan stuff, is probably worth around $25. Here's some metrics, engagement metrics that were shared. But it's important to note that this is not just a YouTube alternative. Also from the Cantor Fitzgerald deck, they're getting into video streaming, email services, cloud services, storage, cloud hosting. And the reason that they have that opportunity is, quite frankly, because what happened with Parler. Now, you can agree or disagree with Parler, but I know firsthand from, a big swath of people in the business world, what Amazon Web Services did to Parler on January 10th or 11th, just pulling them off the internet. That's the catalyst which is living forever. That's the catalyst which is causing a parallel economy to be built. This is the reason, the impetus why people are moving over, even if they think they'll never be banned from Amazon Web Services, but it's just that security, it's a philosophical thing. If there's an alternative, they're going to an alternative. They're not going to stick with Amazon because people just thought that was beyond a red line, just pulling Parler off of the internet completely. So we can see here that it's, again, not just a YouTube alternative. They already have a partnership with Trump's future platform, DWAC, which, by the way, I don't like. Maybe we can get to that in the end. I don't think that's a good investment at all. But they're providing the cloud services for the DWAC app, Truth Social. Also, they are investing in their own payment processor. They just bought I don't know how much, but they just invested in a company called Parallel Economy to build their own payment processor. And this is all about creating that parallel economy with that impetus. The big tech, they have the discretion to deperson and ban any kind of organization they want. So this is the lane that was opened for Rumble to come in here. And, as a result, we see last week before the Joe Rogan thing, February 3rd, new highs were reported in January, 10.8 billion minutes watched, 39 million monthly active users. I put together a chart with the help of Niraj at Story Trading. Is a great follow on Twitter, by the way. This is data points that I put together from interviews, from public tweets, and from press releases. This is a monthly chart of monthly active users. And you can see it's not a record every single month, but it's stepping its way higher with higher lows. And right now we're at 39 million monthly active users. And again, I refer you back to this chart. You can look at these market caps. This is a little bit old before the crash. But even now, after the crash at 39 million monthly active users, I think it could be worth at least $5 billion. And again, that doesn't include the cloud services. That doesn't include On Locals, which I barely even talked about, which is an excellent platform that they bought recently, social media platform. So, and then you guys know about what happened with Joe Rogan, right? So Joe Rogan, you want me to pause there?
Yeah, well, no, I wanted to. There was a lot there. So maybe before we get to Joe Rogan,
sure.
The core here is the video platform, right? There was some other stuff that you just mentioned. There is the expansion into cloud and all that, but like the core here is still the video, right? It's still the player.
The 39 million monthly active users, that's for the player.
Right.
But
that's still the business as it stands right now, right?
Maybe as it stands right now, but the market's forward looking. And the reason a lot of people are invested, including myself, is because of the greater opportunity in cloud services.
Okay. So that to you is where the opportunity is. Let's go to the Joe Rogan thing, because I kind of thought this was I thought this was the whole thing was stupid. Honestly, let's get your take on it, and then we can discuss. Yeah.
Sure. All right. So Joe Rogan, real interesting event. I think the way it played out was very good for the company, but it's not really about Joe. This move to 16, I think, was going to happen anyway. Maybe the timing was a little different, but again, they had the record metrics last month. But first, I want to put out there that there is context. Joe Rogan already in the past, there's a video out on this, but he was saying, hey, if I could be on Rumble, I would be. But he has a contract with Spotify. He can't be, right? And this was in the Cantor Fitzgerald deck. So from day one, Rumble has been out there kind of trying to associate themselves with Joe Rogan, maybe planting a seed so they can possibly get him in the future, right? So we know, or people are keeping up know, that they put this offer out for $100 million and over 4 years. And we got the backstory from Dave Rubin yesterday, who was the founder of On Locals, who's now working for Rumble, about this offer. And it turns out that offer was very real. This was cleared by their accountant, cleared by their attorney. It really is $100 million over 4 years, again, approved by accountant and legal. But to me, it's not about that, because the chances he's going to leave Spotify now are probably close to zero, okay? But what it signifies Here we go. It signifies to me it shines a light on the opportunity. This whole incident with Joe Rogan shines a light on the opportunity about censorship, that there is an alternative. And it also shows that the company is aggressive. They've met the moment, very social media savvy. I'm going to tell a little story in just a second about how hungry this team is, not only publicly, but privately. In fact, here it goes. So I connected with Rumble because we were interviewing the CEO of Fun, PHUN, which is associated in this Trump ecosystem of stocks, DWAC, CFVI, Fun, and a couple others. So I was doing an interview with Fun, and people on social media are like, don't do it on YouTube, do it on Rumble. So I contacted Rumble to figure out how to set up live streaming. And we're a little tiny company, Story Trading. We're like a little nothing compared to you guys, right? So, but they really went after us to make sure we got onboarded. They immediately set up a Zoom with me. This team here, you can see, what is that? 11:55 p.m. at night. This guy's working Eastern Standard, right? Again, here's another email. I told them I found the bug. They fixed the bug like 2 days later, put an update out in the store, emailed me at 12:59 in the morning. They were very, very aggressive. They got me onto the Zoom. They showed me how to port over to Rumble. And in fact, look at this. There's a one button way to sync all of your videos from YouTube to Rumble, right? I was not planning on doing that at all. I was like, I don't want another platform to put stuff on. And you know what? It may be controversial. People may not want it there, right? I said, I just want to go do this one live stream with Fun. But as it turns out, it was just like 2 clicks. Why not? And then voila, a few hours later, all of our videos on YouTube were on Rumble, and we started getting all kinds of views on them. And man, you guys got to tell Jason and Luke about this. With just a couple clicks, you can get all the Benzinga videos on Rumble. You know, I had someone who we interviewed were like, oh, you're going on Rumble. I don't know if I want my thing there. You know, can you remove it? But then after I actually put it up and he saw that it was getting views and people are using it, he changed his mind, even though he's like left wing. So, I mean, this is a great business opportunity, especially since the platform is young. To be there early, you can grow your follower count quick. Very, very easy to sync everything up. And for me, it all adds up to this. Because of that Joe Rogan situation, combined with the record metrics, combined with how I see that this team is so hungry. This was at like $12. I posted this on social media last week. Catalyst and sentiment have reached escape velocity. Technicals are not yet there, but they'll follow. Technicals are a lagging indicator. That's how story trading works. It's my largest position. I haven't sold any, by the way. Moved up from like 12 to 18 and a half. Still haven't sold. It's my largest position. I'm thinking maybe I can make a 7-figure profit on this, just like I did with Air. Air was the first 7-figure profit in my life last year, and I'm thinking I have a chance to do it here.
What are you in from on CFVI?
Maybe my average is around 1260 or 1270.
Okay.
I did lose some money on options every month. I keep playing some options, so but gained it back. So anyway, my average is around 1270. But here's the deal: DWAC, which I don't think is a good investment. I'll put a little note why in a second. But we saw that stock go from like 10 to 50 in day one, and then 50 to 175 the next day. And we talked about this extensively at Story Trading, that move to 50 was all about sentiment. It's people buying the stock for ideological reasons who are holding with diamond hands. And I believe what happened with Joe Rogan is an additional catalyst for people to view CFVI as an ideological play. To say, I don't like what's happening with Joe Rogan. There's a light being shown on censorship. Whether they get Joe Rogan or not the point, right? But here's a platform which is not going to censor people, and I'm going to hold this stock ideologically with diamond hands, and I believe the float is being soaked up and absorbed to set up some sort of squeeze, to 20s, 30s, 40s in the next few weeks to few months. That's my thesis on it. I think it's a ticking time bomb, but I think this is a lot different than DWAC. For the people, oh, Ben's just doing the sentiment and it's a garbage company. No. DWAC is completely speculative. It's too expensive. They have a $1 billion death spiral financing pipe, which I don't think we have time to get into today. But with CFVI, with Rumble, you get that same sentiment tailwind, but with much better fundamentals. And I think I'm watching social media. I see the shift happening. I also see it on the charts. CFVI has been tied to the hip with DWAC. But the last week or so, it's not. Before the Joe Rogan, after the record numbers came out, they started diverging, and CFVI is starting to take the leadership position in this segment of quote-unquote Trump stocks. So that's my thesis on Rumble, and I am holding with diamond hands right now.
So I understand your point about the Joe Rogan thing being not about Joe Rogan. That being said, if you pull up a chart, and as I will right now, of CFVI, you can clearly see the chart reacted specifically to the Joe Rogan headline. That offer was made on Monday. The stock spiked, made its all-time high on Monday. I think those two are related. And so
Yes.
even if it wasn't a real, well, all right, I guess the word real offer is subjective. My take on the offer was like, sure, maybe like it was made in good faith, but it was not an offer that would be seriously considered in any way. It seemed like Joe Rogan and Spotify were on the exact same page this entire time, and that there was basically very little chance of him leaving the platform. So to me, it was just a cheap way for the company to sort of capture some headlines. And so I thought that's what the move was for on Monday. Now that move on Monday at least did not sustain itself, but it seemed like a lot of those gains have held, for the last couple of days. So I kind of thought that headline, the Joe Rogan thing with Rumble, was just noise. It was just noise. There was no reason to take that seriously at all, despite the fact that the stock went from what did it go from 13 to 18. To me, it just wasn't serious.
Well, I think it may not be serious in what's the likelihood Joe Rogan will accept it. In that viewpoint, you can say it's not serious. But in terms of, again, how serious is this? How serious is Rumble? I think they are serious. If Joe Rogan, if something happened with Spotify and it fell off there, they would take him in a heartbeat, I believe, and they have the money. I think they're getting $400 million from the merger with CFVI. So, and again, I think it shines a light on what's going on, which is very, very important. And it shows how hungry this team is. It's not just Joe Rogan. If you see, they're on social media all the time, grabbing anyone, not just for censorship reasons, but anyone who has any problem with YouTube, they're like publicly telling them, come on, join Rumble right now. We'll get you onboarded. And they're that aggressive publicly, and they are that aggressive privately with customer service. So it's definitely, they're all in, they're hungry, and they're doing everything they can, both publicly and privately, to onboard anyone who has any kind of issue with mainstream social media.
Wait, can we go back to a few slides on your thing to some of those metrics real fast?
Sure.
Did you have the user metrics up there?
Yeah, I'll grab them.
I want to get those up real fast because I want to see those again. Because here we go.
All right, this is the monthly active users.
Okay, that's what I want to see. So it's a little bit hard to see the numbers here. So it looks like that number on the right says
39 million. Sorry about the.
Okay, 39
million on the far right.
Yeah. Okay, 39 million monthly active users. That's as of January of this year. Right, January.
Mm-hmm.
Okay, 39 million. It's actually more than I would have thought.
It's a lot. There's a lot of content on there.
Well,
I've been using the app myself.
I think what's interesting here, and I got to do that, Ben. I got to just get on Rumble and actually like explore it, see everything what's out. What I've found in actually researching this is through in the last couple of years, right? We've seen an uptick of criticism over big tech, for deplatforming certain people, censoring, and to be fair, it's mostly of on like right-wing voices, but there have been instances of whether it's Reddit, Twitter, whoever, taking down some like prominent left-wing voices as well. A lot of these alternative platforms have popped up, right? Whether it's Gab, Getter, Parler,
and they've failed
through Truth Social, and they've all failed pretty much for the same reason, that they can't get enough users because it's not. Essentially, people will go on Parler and they're just seeing the same thing, whatever. Twitter's interesting because you see different takes, whatever. So if Rumble can prove to me that it's not just getting, right-wing content creators on there and right-wing users, if it truly becomes like a true marketplace of ideas and the user count keeps growing, then I do think Rumble is more interesting than some of those other names I mentioned between Parler, Gab, Getter, what are some other Truth Social? I mean, there's all those ideas out there. I just think that there's a reason some of these other ones haven't worked in the past. So I'd be curious if Rumble's able to overcome those obstacles that the other platforms have run into.
Sure, I think I agree with some of what you said, but I think the reason that Parler and Gab didn't succeed is Gab's app was never ever approved. They never had and you can't succeed without a smartphone app. And Parler, they were kicked off as a smartphone app. Now they came back later, but they totally lost their momentum because of that. So I think actually the biggest risk this company has is if Apple or Google decides, you know what, let's just ban Rumble too. They banned Parler and they didn't ever allow Gab on. So I'm actually a little curious why they do allow Rumble on, because there's a lot of content on there that is banned on YouTube. You can't, the anti-vax stuff you can't say on YouTube, and a lot of the content is anti-vax stuff on Rumble. And questioning the election you can't have on YouTube. A lot of the content is about that, right? So, and Apple and Google, could they just make a decision any day to ban them? Maybe. So I think that's the biggest risk that exists, and I think that's also the biggest reason why those other platforms didn't take off. You make a good point about, can they get cat and dog videos and music videos and people from the center. I mean, they got Alan Dershowitz recently, which is center, I believe, to come on.
Well, I don't know if that's the barometer we want to go for right now.
But it's early days.
Really
but you know what? But listen, you know what? Even if they don't get there, I'm not saying this is going to displace YouTube. But unfortunately, listen, I wish this was not the world we lived in. But because of the policies at YouTube of certain things you can't talk about, they're forcing the creation of two different platforms. And, maybe that is, a niche for them, right? Maybe they don't get as big as YouTube or displace YouTube, but maybe that's where you go for alternative content. And I think the market is very big and big enough for that. Remember, it's not just the US, it's a worldwide market. So, I can see them growing for a long time to come.
What about the SPAC risk here? I mean, at the end of the day, this is still a SPAC, and the merger hasn't even gone through yet.
I haven't heard any. I know DWAC does have a little bit, because there's some potential investigation going on, because they apparently perhaps maybe knew that their target was Truth Social before the SPAC launched, which is illegal. So that's something that's being investigated. So that's a possible. And also there's political reasons why people may want to stop Trump from that deal going through. But I have not heard anything, not even rumor or any hint of wrongdoing regarding this merger. So I'm not worried about that.
All right. I would say this, Ben. I appreciate your thoughtfulness on this. And I don't know if you've convinced me, although you do have me interested in this MAU chart. I think we'll probably, that's probably the one number to rule them all. If the MAUs keep growing, then that changes everything, and if they collapse, that changes everything as well. So we'll have to keep an eye on that number going forward. Do you know anything about the timeline here on this SPAC merger, or no?
Q2 is all we have.
Q2. That's specific.
Mm-hmm.
All right. So I guess we'll have to wait and see for that. And I lament asking this, but someone asked in the chat, so I'll just relay it to you. Do you have a price target? I think price targets are stupid, but do you have a price target?
I personally do. For some, I'm overweight now, and I have some options. So, it went to 1850. I didn't sell yet. I'm targeting like 20 to 25 to start. I think at 20, I'll start taking some off the table. 20 to 25
that's a much
area.
better question. At what point do you start to sell? So you said 20. If you get to 20, you start to lighten up.
Yeah.
Okay, that's really good insight. I would much rather know that than like, I think the stock could go to 50 in 5 years. No one holds. Maybe some people hold 1,000% gainers, but most normal people don't. So okay,
hey,
at
work
20,
with there.
at 20, you start lightening up. Which is actually not that far away from now. So all right, that's good to know. Again, I appreciate the insight here. I appreciate the research and the thoughtfulness into it. And I think we should probably have more of this on the show, Aaron, because even if we don't necessarily agree, I'll give you props on the argument was.
I agree with everything Ben said. I just
was not convincing.
My only, I guess, criticism or like worry about the stock is what I stated. Just there have been a number of these platforms that have had like the same idea, right? That's the story behind it. Is we need an alternative to Facebook, Twitter, big tech. We need a free speech alternative, and these other platforms have failed to really grow and capture a user base. And it looks like, from what we can see so far, that Rumble's overcoming that. So I think we just got to stay on top of this story.
Yeah.
Ben, we'll have to bring you on to give more updates on Rumble. And of course, Rumble's not the only stock you're watching or looking at. So maybe next time you'll have something else too, and we can also do a touch back on Rumble. But yeah, I mean, bottom line, I think this story is worth watching.
Let's not act like the big tech companies don't all have relationships. Like, they're competitors, but they're also friends, right? So like Apple.
Oh yeah.
And Apple. And
when they want
to be friends, they're friends.
When they took Trump off last year, they all did it within like an hour of each other, right? It was like YouTube and Google banned Trump, and then so did Twitter and so did Facebook.
Oh, they're
all
talking
within
to each other for sure.
Yeah, exactly.
They're enemies, but they're friends when they want to be as well.
All right, Ben. Appreciate you coming on. As always, you have an open invite.
If I have a minute, okay, because it's a very timely thing regarding the Super Bowl. I was on Wolf Financial Spaces last night. If you guys, it's a great show, by the way. And
Gav's coming on next week.
Oh, good. So I had a couple ideas for the Super Bowl. There are 2 stocks in the story trading universe, which are VIP picks. Very quickly, it's Wallbox, WBX, and SoFi, which you all know SoFi. Wallbox, I mean, these are all multi-billion-dollar companies. And Wallbox has a couple Super Bowl commercials coming out. In prior years, I've always noticed there's a pop Monday morning on companies that have Super Bowl commercials. And it's also electric vehicle charging. And you got DCFC, which is up, over 100% in 2 days. It's an EV charging stock, and they're meeting with Biden or something. So I think there's a sentiment tailwind in EV charging.
What was the one?
Super Bowl. DCFC? Oh, you don't know about DCFC? DCFC, it's like it's
up
crazy.
72% today, Ben.
Yeah, and it was up like 60% yesterday. So that's an EV charging
you
stock.
Told us about it 2 days ago.
What the hell is this?
Well, I didn't. Yeah. But they're meeting with Biden. Yeah, and they're doing.
No,
like
I don't
new
know
factory.
about this, but now I do. So
now
thank
you do. All right. So that's giving.
Ben, go ahead.
No, it's giving you a little bit of a sentiment tailwind to EV charging stocks, and then you got the Super Bowl Sunday night. So Wallbox is something I bought as a trade. I'm selling that either Friday as an event anticipation or Monday morning after the Super Bowl. And SoFi, maybe even bigger. Everyone knows SoFi, but how many people know Super Bowl's at SoFi Stadium? Maybe people who are really into football know it. But
all right,
I think that stock can surge Monday morning.
I cannot wait. If that happens, and I say this as someone who put SoFi in his long-term portfolio here, and I'm very underwater. If we do get Monday morning pops on Super Bowl commercials, Aaron, let's just start smacking all.
I'm selling them.
Just start selling into all that.
I'm selling
crap.
Monday morning.
I already bought
selling into all of it.
Last year we had the Lucid.
Just start hitting bids. Sorry.
Yeah, last year we had the Lucid Motors. That ran after a Super Bowl commercial.
Did it?
Yeah.
I don't even remember that.
Well,
I have no recollection of that.
It was still a SPAC at the point. It was, what was it, CCIV? Remember CCIV?
Yeah.
The CCIV SPAC was running because Lucid aired a commercial.
Really? I have no recollection of that happening.
Yeah.
All right.
I think.
I believe it.
All right. Ben, we've got your Super Bowl plays now. Again, thank you for coming on. It's been too long. Look forward to having you on again soon.
Sounds good, guys. Have a good day.
All right.
Peace.
All right. I appreciate that. Yeah. Someone in the chat said this. Ben's research tells the story. I mean, his story.
That's the name of his thing. Story. See, it all makes sense.
So it all comes back around. But Thomas is saying, yes, CCIV ran to 60. I guess we can look at the chart and see. I don't remember it happening after the Super Bowl per se.
Well, I think the commercial got leaked the week. Like, it was probably like this day last year. Like a week before the Super Bowl.
Okay. All right.
Okay. No, Happy. I'm pretty sure it was a Super Bowl commercial, but I think it got leaked before the Super Bowl is what I'm saying. All right, real quick, checking up on the chat. Creel Poll, I don't know how I'm saying that. Yeah, I think that's funny, kind of funny, but it probably would be a good exercise, right? Like to really truly test like if these companies are really proponents of free speech or just certain speech that they think is being censored. I know that was I don't know off the top of my head, and I don't want to say anything wrong, but I'm pretty sure like Gab or Parler or one of those companies did get into criticism for their like, wait, you guys did the exact thing you were talking about, but to like a leftist voice. So
I don't know. This whole thing, I really haven't wrapped my head around it because like we talked about this the other day, and like I believe in freedom of speech, like to my core, but like are there limits to that, or like does that mean you can say like anything you want about anything, no matter how hateful or destructive? I mean, I don't know. I don't really know where I stand, so I haven't like I can't really wrap my head around.
I'm a proponent of the idea of saying, okay, at this point,
I don't know.
social media is the like if you're
net negative.
Well, I don't think it's. Yeah, I
right.
think it's generally, but I think if you're taken off of Twitter, Facebook, YouTube, you're effectively taken out of the political discourse.
Yeah,
so the point of the First Amendment is to make sure that you can't be essentially like ostracized from the political sphere, from political discourse, just because someone disagrees with what you said. So I would support, amendments to basically making, freedom of speech a right, like ingrained in some of these apps, because otherwise then it really is up to we're letting Facebook, Twitter decide like, okay, what can I see, what can I not see?
In other words, just to make us less reliant on the tech platforms in general. That's probably
Yes, exactly.
The problem with that though is like the whole reason we're in this situation is in the first place is because they're really good at what they do, and the government is not good at that. And when I say that, I mean like Twitter and Facebook built the best communication platforms, right? Like they did. It's not, like kudos to them for building amazing platforms. Now we're stuck in this weird situation where we need them, but we also don't want to need them, but we do need them.
Right.
But I don't know.
And Crowd Paul, that's a point that I brought up the other day when we were talking about this stuff, is like the idea is like, okay, yeah, Trump, someone who's been deplatformed on Twitter, Facebook, all these things, his First Amendment right really hasn't been taken away because he can still go out on the street corner and say whatever he wants to say, or write a book and disseminate it, or get his information out there another way. But what I'm saying is we've gotten to a point now in 2022 where essentially your political, if you're off all those platforms, you're stripped from the discussion.
Okay, I think I have a take here.
Okay.
The market will decide. Okay. If you really did get deplatformed off Twitter and Facebook and YouTube and whatever, and AWS, which is a whole other thing, but if that happens to enough people, a viable competitor will emerge. This goes back to what Ben was just saying.
Yeah, it could be Rumble.
A viable competitor will emerge, and that's a question that the big tech platforms are going to have to grapple with. That they are grappling with. And Colleen, I think Facebook sucks too, but I mean, come on, they're the largest social media platform in the world. They must be a little bit good, right, at what they do.
Well, not better than TikTok.
But
in terms
the
of
market will decide. That's the takeaway here. If we don't have, we have basically a duopoly on cloud platforms in this country. We have a duopoly on social media. Well, not quite a duopoly, but we'll call it a cartel, right? Because you got Facebook, which owns Instagram and WhatsApp. You've got Twitter, you got TikTok, I guess Snapchat, and that's pretty much it, right? So you have a social media cartel. You have a duopoly on cloud with Microsoft and Amazon, mostly. There are a couple other ones in there like Oracle.
Well, I actually just thought about it, and it seems like it wouldn't be that. It's not terribly complicated, right? I think platforms like Twitter and Facebook, they can choose between either being a publisher or a forum or platform. And if you opt for being a forum or platform, which is, so right now, all the big tech companies, and agree, they have way too much power. They get the best of both worlds. They have the power of a publisher to kind of pick and choose like what they want to, promote and whatnot, or take off. But they have the legal freedoms of a forum saying, oh, we're not liable for this misinformation spread on Twitter. It's not us. That's Trump spreading it or whatever. I think if you want to opt to be a forum, like a place where anyone can post whatever, then there has to be freedom of speech built in. There can't be any deplatforming, censoring, whatever.
I don't know. These are questions that,
if you're a publisher,
theoretically should have been addressed a decade or two ago.
Well, it was Section 230 was written in like 1995.
1995.
That's
man.
the problem. It was in the very beginning of the internet. At the time, it wasn't like, if you're stripped off of this website, you're taken out of the political discourse.
Yeah.
Now it is. Which, going back to Cal Pole's point,
I don't know.
I think at the time 230 made sense, but now the world has changed and social media, internet's different. than it was in 1995 than it
Yeah.
was today.
This whole conversation can be made moot by the metaverse, by the way. That's a whole other thing. Real quick, let's do some quick education. Aaron Bryan asked, what does days to cover mean when looking at an open short interest position? Think of days to cover as sort of a measure, basically like a comparison of like how much of a stock's, how much of the stock is sold short compared to its daily volume, right? So like days to cover essentially measures like I think the calculation is current shares sold short divided by daily volume, right? And the real implication here is like the higher the days to cover, the longer it will take for all those shares. I'm not explaining it very well. It's basically a measure of like how outlandish is the short interest on this stock compared to the amount that it normally trades per day. If you have a stock that trades 100 shares a day and there's like 1,000 shares that are sold short, that's 10 days to cover. That's a large number, right? That's a large number. But if you, it's a relative thing, right? It just helps you paint a picture in your head. It helps you paint a picture of like how much of the company shares are sold short compared to the current the daily volume, which is like the daily activity of the stock. Higher number just means whoa, there's a lot sold short here. Shorter number means okay, this is manageable, right? So daily short interest of 100 short interest of 100 shares, daily volume of 1,000 shares, not a very big deal. Short interest of 100, daily volume of 10, very big deal. I hope I explained that correctly.
Yeah, that was a good explanation.
Thank you. I just saw that question in the chat and I wanted to get to it. It's 12:40. I want to talk about Disney before we forget. We have a few more things we got to do, and we're going to bring Jesse Killer at 1 o'clock. I want to do Disney. I want to do crypto update. I want to go through Bill Ackman stocks again because we didn't do it yesterday. We forgot to do that.
I want to do. I want to talk about interest rates for a second too.
Oh no! Why? Interest rates?
Yeah.
All right. Wake me when it's over.
Okay. You want to do it right now then?
Yeah. What do you have to say about what do you have to say about interest rates?
There's some new data coming out.
Oh boy.
That shows that a lot of this. All right. So we're gonna get the inflation number tomorrow, and this is tied into inflation because as we've seen, hot CPI numbers. When dissecting them, you can see that it's certain categories driving the inflation more than others. Right. Oil.
Food.
Energy. Cars. Cars is the biggest one in terms of actual like a product that we can buy. So if the problem with why cars have gotten so expensive, it's not a secret. It's because of these supply chain issues that chips have become hard to come by. So then they can't produce more cars, making the prices of new car rising as well as used cars. So what can be done to try to alleviate that bottleneck of chips? One thing is investments into these chip companies, right? And rising interest rates slows down those investments. So to get to where we need to be in terms of meeting production to where demand is right now, we shouldn't want to slow production down at all. And there's some here. I'll share my screen real quick.
Yeah, please.
This is a good Twitter account showing some good insights. Renaissance Macro Research.
Oh, another firm named Renaissance?
Yeah, and I actually reached out to them. I'm hoping to get them on the show, but they shared some.
This is not the hedge fund, right?
No, this is not Renaissance, the quant firm.
Nor is it the IPO research firm.
No, unless one of them
Great.
just invested in this as like a side macro research, but I don't think it is. I think it's an independent macro research firm. I don't know. I'll do some more research on that. Anyway, positive job postings on Indeed, right? Showing people are hiring. That's no secret. Where's the here it is. Credit card spending has actually increased over the last month, showing consumer sentiment is rising. And then we have this other, I got to go do it to a different tweet here. Morgan Stanley, let me share, Share this.
Food will be next. Food's happening.
Food?
Yeah, in terms of inflation, I think food, Mike.
Oh, yeah. This is from Morgan Stanley. Inflation hits lower income households the hardest.
Yeah.
While inflation hits lower income households the hardest, we are still seeing wages outpace inflation for the lower income tercile.
Okay.
Adjusting nominal wages for inflation. So basically, I think there are a lot of things happening right now that are showing that, like, through just normal supply and demand, production ramping up to meet demand, that raising interest rates to slow down investments right now will end up hurting us. Like, it's like, why, if everything is booming right now, we're getting out of this COVID, we want to raise rates now. It just doesn't seem like the right time in my mind.
Anytime I see anything that is talking about victories for the low end of the wage scale, pull up that chart or repeat what that it said. It said that inflation is hitting the lower tercile of the job market the hardest, but its wages are still outpacing inflation. I know that wage growth on the lower end has outpaced wage growth at the higher end for the last year or so.
For the first time in a while, yeah.
I know. So it's like, yay, whoop-de-freaking-do. Look at all the poor people. It's a victory for them. No, it's not. Income inequality has gotten way worse in the last 2 years. The top 1% have gotten even richer, right?
I think both things can be true. I think the richest people could have gotten a lot richer, and some of the people in the lowest income bracket are better off than they were 2 years ago.
I just don't know how much better off they are, frankly. Right? I really like. I wish they were better off. I just don't see. People like to cite these numbers that the wage growth is faster on the low end than it is on the high end. But like, come on, they're so far behind. The people at top are so far ahead. It's not a fair comparison.
Yeah, I agree. I mean, again, so the source here is Bureau of Labor Statistics, Harvard University, and Morgan Stanley Research. So I thought this was interesting coming from Morgan Stanley. I just bottom line, look, I mean, I think it's certain at this point the Fed will raise rates because they have to do something. They have to show they're doing something. But I don't know. It just doesn't seem like right now this is the best time to slow down investments.
I started reading a really good book last night.
What book?
The Psychology of Money.
Ooh.
Which it's been sitting on my bookshelf for 6 months, maybe. Brian Portnoy, he's a great follow on Twitter.
Dave's dad, right?
No.
Oh.
No relation, to my knowledge.
This was basically the point I was trying to make.
Yeah.
There's a lot of evidence that the first quarter could end up stronger than economists are expecting, or is now tracking via the Atlanta Fed's GDP. Now, payrolls surging in January. The Neil data out of points to credit card spending is on fire, too. Basically, again.
How can both be true, though? There's so much contradicting data out there. How can... Wait, what does that say? Credit card spending is on fire? Well, yeah, of course it is, because the costs are going up. Of course people are spending more money. Costs are rising. People are spending more because they don't have a choice. Isn't that... Come on. No?
I don't know. I mean, I think the bottom line is that we're in a better position right now than from an overall economy standpoint. I'm not just talking about the stock market.
Isn't raising rates a sign that the economy is healthy and stable?
Yes, but not if there's... You don't want to raise rates if there's still... Like, my point is that these problems that we're seeing in terms of supply chain issues, not enough production to meet demand, will not be helped and will be worsened by interest rates being raised. So once we get to that point where it's like, okay, now we are meeting all of production in terms of demand, whether it's cars, food, regardless, then that's the time to raise rates, right? Once you're back out of... And I don't think we're out of this...
we're not out of the woods yet.
We're not out of the woods yet. Thank you. Bottom line, from COVID, from all the supply chain issues, logistics, whatever it is, we're not out of the woods yet. So I'd rather wait till we are out of those woods, and then we see these strong signs of a growing economy that, okay, now it's time we can raise rates a little bit. But
all right, well, hope maybe the Fed will listen to you. We still have another month and a half till we're going to raise rates. Although that's all priced in at this point. You know what? Out of curiosity, real fast, and then we'll move on. I'm just curious. What does the CME FedWatch tool say? The CME FedWatch tool says the market is currently pricing in a. Oh, get out of here! Yes, except cookies. Come on, enough with the cookies. I get it. CME FedWatch tool. Come on. There we go. Okay, CME FedWatch tool says that the market is pricing in for the March meeting a 75% chance of a 25 basis point rate hike and a 25% chance of a 50 basis point rate hike. In other words, a 100% chance of a rate hike in March. So that's pretty much set at this point. Now look out. It's not the one though that you're concerned about. It's like the 4, right? One rate hike is no big deal. 4 rate hikes though is a bigger deal.
Yeah, and I'm all for the rate hikes when the time is right. I think you need that. It's a sign. You know, the rate hikes are fine as long as it's coupled with like a strong, healthy, growing economy.
I don't even know if we're growing anymore at this point.
Oh, I think we are. The GDP, I mean, projections are higher now than they were pre-COVID.
Yeah, all right. We'll find out more about this in March when the Fed hikes interest rates. I don't know. The last time the Fed raised rates, like the last time we went through a rate hike cycle was 2015 to 2019, right? 2018. Market did fine.
Yeah.
So, anyway, let's move on here. I want to talk about Disney. Okay, Disney reports earnings tonight. You guys know this is in my never sell portfolio. The people over at Visible Alpha were very kind enough to send me over some research. I asked them, hey guys, can you please show me a comparison of Disney Plus subscribers compared to Netflix, compared to whatever else you think is relevant. So they were like, yeah, sure. Here's a table, and I'm going to bring up the table on the screen right now, and it's a lot to digest here, so I'm going to walk you all through this here. This is a table showing Disney Plus subscriber growth compared to Netflix and Amazon Prime. I want to focus mostly on the bottom half, okay? I don't really want to look at the top half of the table. Let's look at the bottom half of the table here, okay? This is going back 2 years. This is going back to basically when Disney Plus launched, which was in November of 19. They got it right before COVID. Let's talk about this growth rate, okay? Because that's all that matters. The growth rate is what matters. It's not so much the absolute subscriber number. It's the growth rate of those subscribers. So let's go here and look at row 6 and look at Disney Plus subscribers, and the growth there. Obviously, they had a massive pull forward from COVID. If you look at these growth rates, they're starting from nothing here. They started from 0, right? So COVID was a huge windfall for Disney Plus. Last year, a little tougher of a comparison, right? The growth slowed, as is to be expected, right? The larger you get, the harder it is to grow. This yellow column here, column I, this is the consensus estimate for this quarter. Well, no, for last quarter. In Disney's case, that number comes out tonight. The consensus estimate is that Disney Plus subscribers will have grown 30% in the fourth quarter of 2021 compared to the fourth quarter of 2020. The absolute value of those is right there, row 3, 189,000 versus 146,000. So I want to look forward though. Okay, this is all looking backward, and you can see Netflix also had a nice bump during COVID. Amazon, frankly, I don't know how fair of a comparison that really is, because Amazon Prime is so much more than just a video streaming service. It's a shopping platform. So I really just want to stick with Disney and Netflix for now. And let's just go to the right here. These numbers, everything to the right of the yellow, these are estimates, okay? Now, where do these estimates come from? These are estimates that Visible Alpha has gotten from, they've basically aggregated estimates from around Wall Street and averaged them out as far as I understand it. And these are the consensus growth rate estimates for Disney Plus and Netflix subscriber growth going out for the next like four years. This goes out to like 20. This goes out. Wow. When does this go out to? This goes out to 2030. No, it goes out to 2030. Holy moly, that's a long time. So basically for the next decade. All right. The takeaway from the right side of this table is this chart. I'm going to scroll down. Okay. And this chart basically shows that analysts are predicting that by the fourth quarter of 2022, Disney Plus streaming subscribers will surpass Netflix. That seems kind of crazy to think about, doesn't it?
Yeah.
Netflix had when did Netflix start streaming? 2010?
Probably
maybe
somewhere around there.
Netflix had basically a 10-year head start on Disney Plus. And the analysts are saying, hey, by the end of this calendar year, Disney Plus will have more subs than Netflix. So the takeaway here is two things. The takeaway is this 30% number. Wait, where's my mouse? This 30% number. That's the estimate for tonight. Let's watch what Disney says tonight. And actually it's 30% and it's 189. It's the same thing, right? So 189.6 thousand. That's our estimate for total subscribers as of the end of the year. That would be a 30% year-over-year growth rate. Does Disney come in above or below these numbers? Above, bullish. Below, not so much. So I thought this was a really good look at the historical. Let's just keep this table up for a second. This is the historical growth rate of Disney Plus, Netflix, and also Amazon subscriber growth going back 2 years. So come on, can you get a little bit? Can you just stay like that? Perfect. Okay. So again, they're saying end of this year. End of this calendar year, Disney Plus is on the left of each of these groupings. Netflix is on the right. They're saying end of this year, Disney Plus more subscribers than Netflix. Does anyone have thoughts here? Aaron, do you have thoughts here?
I'd be surprised if this comes to fruition and Disney Plus really passes Netflix in terms of subscribers.
This is a really good question from Corey. Thank you for bringing that up, Corey. Do these numbers only include Disney Plus? Or do they also include Hulu and ESPN? It's all encompassing. Disney does break them down. Oh no, it's not all encompassing. Sorry, it's just Disney Plus. This is just Disney Plus.
How is that possible? How could Disney Plus surpass Netflix in terms of subscribers? Is it U.S. global?
This is global, to my knowledge. Wait, yeah, this is global.
Because
no. I don't think. No, you're right. It doesn't make sense because Netflix has kind of plateaued in the U.S., but they're still growing overseas. So maybe this is just U.S. I think this is just U.S. Sorry. Yeah, Corey's like, if you add Disney, if you add Hulu and ESPN. Although, frankly, Corey, I'm not sure how much either of those are really growing. I'd have to look at it. No. This is just U.S. This is not global. Global Netflix would trump them.
Oh, yeah, it could be just new subs only. Wait, let's read. What does the? This is coming from Visible Alpha. Let's see what they said about it.
Okay, the lesson here was maybe Spencer needs to spend more time on this before he brings it up on the show.
Oh man, that's good. Great.
That's the lesson here. Spencer, look at these things for more than 5 minutes.
Yeah, I mean, all we would need to do is if it's saying 200,000, so it's got to be new subscribers, right?
Okay.
It's saying 200,000.
Spencer takes a mulligan.
Added in a.
Spencer takes a mulligan. Sorry.
But no, it's not your fault because the title of this chart is a little bit.
Jeez, that was bad. Oh, I totally butchered this segment here. Oh, I'm sorry, everyone. I did specifically ask for new subscribers, so I should have known that's what we were looking at.
Well, yeah, I'm just confused. Wait, because
Oh, God.
Netflix reported 8
Oh,
million
God.
new
Oh,
subs,
no.
but they missed their mark. So does that mean?
I asked for new subscribers. Of course, that's what we're looking at. That's what I asked for. Why wouldn't it?
I don't know. I still don't know what this chart means or looks at. But we've got new ones for Twitter. Maybe these ones will be a little bit more.
Well, Twitter. Let's say that for tomorrow? Can we say that
When does Twitter report?
They report tomorrow.
Oh, okay. All right.
Let's save it for tomorrow. Jesus Christ. Oh man. I was just trying to show some cool data, and I completely butchered the interpretation of it. So hopefully they're not watching this, because if they are, why would they send me more data in the future? I hope that no one stops sending me data.
Well, maybe they just need to send us the data, but then with like a TLDR.
Maybe that's
or
takeaway
explain
here.
it like
God
I'm 5.
Damn. It's brutal. Jesus. Anyway, let's move off of that. The point here is I own Disney and I'm never going to sell. That's the bottom line. But I think I'm not feeling great about the. I said this morning I wasn't feeling great about the short-term prospects because Netflix set the bar pretty low. So we'll see. Content is king, right, Aaron?
Yeah. So wait, you're bullish Disney into earnings?
I'm bullish Disney long term. I'm cautious. I'm very cautious for tonight.
Well, speaking of streaming too, and maybe we'll talk about this when Jesse joins us in a couple minutes. But
holy moly.
Roku having a good day breaking out. I mean, Roku's one of these
Everything is up today.
stocks. I know, but I mean, I like to see which stocks on a day like this are up like 5% or more. And Roku's one of those stocks, like many other stocks, have just gotten absolutely. I mean, highs of 470 down to 160. I mean, more than. You're talking well over 50% drawdown, right? It's more like a 70% drawdown from its highs. At some point, it becomes attractive to buyers. I mean, you can throw Square and PayPal in that category too. So yeah, I mean, I think, and also with that said, it's interesting that Netflix is it's flat, but I'll go ahead and call it red. On a day like today, if you're flat,
You're red.
You're red.
If you ain't up, you're down.
It's up 0.18%, but you compare that to the Qs, you compare that to Netflix's peers. Netflix having a very poor day.
You know what else is having a good day today? AMC. Did you see the AMC headline?
I did not.
There's several. AMC, I saw this morning. They're considering launching AMC branded popcorn in supermarkets.
That's old news.
How bullish are we?
That's old news.
That's old news?
Yeah.
Really?
Yeah.
I thought it was from this morning.
No, it's
No?
weeks old. I think the news from this morning is that AMC creates VP position to oversee popcorn business. They announced that they were spinning off their popcorn business like
Oh.
a month or two ago.
Shit. All right. I stand correct. Wait, there's a PR from this morning. AMC welcomes Ellen Kopakin in a newly created position, Vice President of Growth Strategy. They didn't have a VP of Growth before today. Oh, man. Even we have that.
Yeah, I don't know.
Oh, gosh. Anyway, can we do a quick crypto update? Then we'll bring on Jesse.
Let's do it.
All right. Here's our crypto update of the day. Growth is hot, which means so is crypto. Look at that. We don't need no hack. Who cares about the hack? The hack was 6 years ago. Who cares? Bitcoin's up 2.5%. ETH is up almost 5%. Near Protocol, our old friends, up 4%. Who's leading today? XRP up 9%. Avalanche up almost 8.5%. Good day for Sheeb. Look at Sheeb up 10%. I haven't talked about Sheeb in a long time. Where's Sheeb at? You can't even see it because it's too many zeros. 0.0001 something. I don't know. Can't even see it. Anyway, here's your heat map brought to you by Voyager. If you want some free Bitcoin, it's so easy to get. Download the Voyager app using the offer code ZING when you sign up. Create your account. Fund it with $100. Make a trade. Any trade will do. And they will send you some free Bitcoin. Check it out. All right. I'm like afraid to look at the chat. I'm like afraid I'm being eviscerated in there. I hope I'm not. But I'm not having a great day right now. I'm not having a great few minutes right now in terms of content. So let's bring on Jesse Kaler. Hopefully he can save me. Jesse, this is the last time we're going to speak with him before maybe his life changes forever. We'll find out on Sunday. Jesse Kaler, live from Cincinnati. How we doing?
I'm doing great. I kept the shrine up for Bri.
Yeah, I see
so
that.
You can see that.
I see that.
I
So
figured it'd be bad luck to take it down.
There's a very real chance that when we talk to you next week, Jesse, your life will have changed forever. Are you prepared for that reality?
I'm getting teary-eyed just thinking about it. Yeah, I mean, I'm excited. If you guys want to see something, even if you're not a fan of the Bengals, watch the reaction videos on YouTube of this.
I told you to watch that.
No, I know. I was just messing around. No, I watched it. I literally started getting teary-eyed. I was like, man, he was right. I was like, this is great stuff.
Wait, can I confess? I also got teary-eyed.
Did you really? It's like, man, these guys were so excited, so happy, like to see this. I was the same way. I had my own video of that. I have my own personal one. Maybe I'll send you a clip of it.
Yeah, it's cool to see people care about things. It's fun to see people happy. We should see people happy more often.
Yeah, listen to Born to Be Free. Smash that like, especially now that I'm on here. We need this thing to jump at least a couple hundred likes while Mr. Kaler is on the show. But let's talk about the Disney real quick, just to continue to go on. If you want to share my screen there.
Yeah, go for it. What do you got for us?
Here's your daily setup, kind of a trade that I'm been just looking at while you were talking and just trying to set up where would some people be looking at levels. And I've put up some levels of 140 to the downside and 150 to the upside. It's almost like they're just showing you where they want to keep this thing in a range here. And then you have your dramatic moves to the upside and dramatic moves to the downside. If there was some really good news, really bad news, I would say a 159 and a 129 are your up and your down targets. And then looking at a trade from this morning, if you would have got in around that 140 or that 144 in that range, then this would be your possible upside downside move to those targets. And you could pull this thing down to make it a little bit more realistic. And to me, it just doesn't look like it's shaping up to be a trade that I want to take. I wanted to take this when we talked last week. I said I wanted to play this into earnings. Same with Twilio, TWLL. And I think that this time I'm going to hold off. You know, I don't really have a strong enough feeling to go into it, and I don't have enough indicators that are telling me that this is a good trade. So I won't be taking a trade on Disney overnight here, but I possibly might be trading it in the morning, depending on how it's moving in the pre-market, things of that nature. And long-term, bullish is the same as you, Spencer. I do think that Disney will continue to grow and maybe even open up some new theme parks here in the future as things go, that are, maybe in the Midwest is what I've been thinking, instead of being only a coastal attraction, basically. But you never know. Maybe they come and buy Kings Island from us. I think they owned it at one point, I think. But
speaking of Cedar Point and SeaWorld, right, merging, right, Fun is actually holding on to a lot of those gains I saw yesterday. So I don't know if that's a trade there for you, but
Jonas called me Topher Grace. I don't know who that is.
Yes, you do.
He's Eric Foreman from that 70s show.
He's the actor.
Oh, I do not look like Topher Grace. Come on.
Actually, he kind of does a little. You kind of do a little.
You know, some guy last night.
That's a compliment.
I was having drinks with my wife last night, and some guy said I talk and I look like Ben Shapiro, so I had to watch him today and see.
Are you kidding me?
Dude, I get that in the chat like once a day.
Me and Bri, we're
no,
we kind of look alike, right?
Jesse, you look nothing like Ben Shapiro.
Thank you.
Are you kidding me? You don't talk like him either.
Right.
Yeah, you have like a deep. Well, like Ben Shapiro, I don't even know. I don't know.
Who says that?
I think it's funny when I get when people say that to me, because I get.
You at least have like the darker hair. I feel like.
Yeah,
like,
I think it's the eyebrows.
Could be the eyebrows too. Yeah. Dude, no. Topher Grace, I could
definitely. Powers in the eyebrows, baby. What's that? Who's that guy? The dad on American Pie? Oh, I love that guy.
Eugene Levy. Rohan, can we get some Zoom action going on here? Or
on the eyebrows?
I don't even know if Rohan's around. He may be busy, but
here's my weird trade that I want to revisit. Remember ITUB, the Brazilian bank that I told you about?
Yeah.
At 386, I sold it at 475.
I remember that.
I just wanted to show you the chart there when we were on last time when we were talking about it a few weeks ago. We were at 386, and I said, "Here, look at the left of this chart." I said, "Look what happens every time it gets in that area, it bounces, it gets nice moves up to the upside every time. 1, 2, and then look, this is when we were talking 3. So I got out. I took my profit. I was only looking for $1, and I got more than I asked for. So, or right less than what I asked for, like 5 cents. But I was happy. And that was just a quick recap I wanted to go over on that one, and just maybe talk about something that I don't think anybody in the history of Benzinga has talked about ITUB other than me. So,
Yeah, no, that's not one that's on my radar. Although I have noticed some weird strength in South American equities. There's a handful of South American ETFs. There's a Brazil ETF. There's a I think there's an Argentina ETF. There's a Venezuela ETF, and
There's an Indian ETF. I mean,
that's not.
well, if
the
you
same
think about it,
continent.
all those names that you just described, or all those places, all these different areas of the world, they have nothing but potential growth when it comes
I thought
to
we were just naming
economies.
emerging markets ETF.
Economies.
No, we're not. No, we're not just naming emerging markets ETF.
I'll take that back.
No, but like the reason I bring that up though is because, again, I'll drop you some tickers right now, but I was looking at like just the top performers year to date. If you take out all the leverage funds, and you get like well, it's all energy and stuff now, but before it was like oh, I gotta scroll. Okay, this is annoying.
So
No.
Jesse, we're not gonna YOLO into Twilio at all.
That one I was going to cover in a minute. Let's go back just a second. I wanted
Yeah.
to keep this thought going on the Super Bowl, and you guys were talking about
okay.
commercials. Ford and GM always come out with like a tearjerker or like something you're like, man, that was a good commercial. And I think that Ford and GM are going to come out with some really good commercials, and Ford's already been really in favor when it comes to the public. I think almost everybody I know in the car business was like, man, I'm an idiot for not buying this thing under $5 in those areas, even under 10.
But that chart looks hideous though, Jesse.
It does look hideous, but maybe this is a relief pop for a trade, not for, maybe there's continuing downside for Ford for a little bit, maybe back down to 15, I think. But potential, I'm just saying, there's just something that you could watch.
Budweiser also has like the biggest tearjerker commercials. Have you noticed that, Aaron?
Yeah, Jesse brought that up. Anheuser-Busch. They, yeah. I mean, I grew up in St. Louis, like so. The Clydesdale, they would like bring the Clydesdales to our school and stuff.
I saw them once in person.
Really?
In Savannah, Georgia.
Oh, nice.
Yeah.
Yeah, they would bring them around Busch Stadium too before Cardinals games.
Remember the frogs? Budweiser.
Yeah, the
Remember those?
little dog, the one,
No,
the
I
runaway
actually don't
dog
remember that.
commercial was like the most famous Budweiser one. That's one I remember. It's
You
probably
have
from,
to
like,
look that up, Spencer. You have to look up the Budweiser frog commercial. You have to. check that out.
Bud Knight was also a great commercial from a couple years ago. The Bud Knight. You guys remember
Yes.
that one?
Yeah, the Bud Knight, and then they killed him. But who was? wait. What was the beer company that had the Man Club?
Ooh.
Was that Coors Light?
Maybe. Yeah.
Or was
Tap
that
of the
Miller Lite?
Rockies, baby.
Was that maybe Miller?
Oh, what was remember Keith Stone?
Yeah.
That was a good one too.
Keystone.
No. Anyway, so just
Tangent.
just to put
Yeah, all
a
right, let's just say their favorite beer commercials. All right, everyone drop their favorite beer commercial in the chat.
I actually have a favorite beer commercial from when I was a kid. I think it was for Bud Light. It involved throwing pencils and it went up a guy's butt, but that was the good old.
right.
What?
We can. It's on YouTube.
Dos Equis, the most interesting man in the world. That was a
That's
good
probably one of the
campaign.
best beer.
No, but
campaigns,
hold on.
or, like,
So wait, so
guys in the
just
world.
just to put a bow on the South America thing real fast. There's a few ETFs and they're having please don't chase performance, but like EWZ is Brazil, right? FLBR is also Brazil. What else we got? We have FLAA is broad Latin America. There's a Colombia ETF, GXG, up 11% in the last month. There's actually two Colombia ETFs. There's ICOL is the other. You've got a Chile ETF, ECH, up 5.5%. You got a Peru ETF, only 3%, so not great there. Argentina, ARGT, not up a lot. So you have a number of Latin America ETFs and or Central South America ETFs, and some of them are doing okay. So I just wanted to point that out and just say it's been a strong start to the year. This past week notwithstanding, but strong start to the year for the emerging market world, at least. Yeah. So the commercial I was saying was it was for Bud Light, I think, and the guy was at work and he was wasting time, and his wife calls and he's like, "Yeah, I'm super busy. I can't come home right now." And he's throwing pencils up at the ceiling just to kill time. And his wife's like, "I got Bud Light," and he like throws the pencil up, and it goes through the ceiling up to the floor above him. And there's a big meeting, and it goes up a guy's butt. Anyway, it was really funny when I was a kid. It's probably still funny. Anyway,
All right.
let's move on. What else? What else you watching here, Jesse?
Let's pull up the Twilio, TWLO. This one is a true YOLO, right, Brian? Because this thing can go all the way back from when everyone got it real happy on that one big month. That's 1 month. Look at that thing. From 90 to 200. So there's a lot of pain already built into this. If you look to the upside, there's a lot of people that have lost a lot of money on the way down here. So in my opinion, the only way to play this is to go both ways, just to go put and call and just YOLO and hope that there's a big enough move to the upside or downside to cover the loss from the other side. That's the only way I would play this one. And it would truly be, I would be willing to lose. I know that I would know that I'm either going to lose all the option or I'd set like a stop loss at 50% on both sides, just to know what my loss could be.
Okay. Yeah. Wow. You're bringing up earnings plays. We have any non-earnings plays?
Well, I prompted him for this because I think we
Okay.
discussed it. I think we discussed
Last
Twilio
week.
last time Jesse was on, and we said we'd revisit it before earnings. I've been playing the earnings plays the past couple weeks, and the problem is okay. So the implied move is so high for Twilio that the contracts are just so expensive. I mean, even if I
They're
wanted to
really
buy,
expensive. And there's huge spreads right now between the bid and the ask.
yeah, if I wanted to buy a 210 call that expires on Friday, they're more than they're $11 $11.25 right now, and I mean the break even is you would need Twilio to go up 10% overnight.
Yeah, that just
So
doesn't
I just
seem
don't
like-
think it's worth it at this point.
It's not. I'm not going to play. That's why I said I'm not going to play this one or the Disney, just because they didn't set it up for us option traders to make it look juicy enough, if that makes sense. And there's not enough meat on the bone here.
I guess we got to mention this real quick. I guess in the last 15 minutes or so, Rogan has officially declined Rumble's offer, and the stock is down 16%.
Holy smokes.
Stop.
Um,
Chart to the chart.
CFVI, Charlie, Fango,
Foxtrot.
I got it.
Victor Indigo.
Victor.
Yeah, you have your chart, but I also want to pull up my chart.
Oh my God. Look at that candle.
I try to tell Ben this. I feel like it wasn't the move happened because of the Joe Rogan offer.
This is the guy that was just on. I was listening on
Yeah.
He didn't make a bad argument.
I was
No,
taking
and
my
look-
kid to school, so this is the same guy, right? That just was just saying he was up all that, and now he's down.
Yeah, Ben, who is just on, he's got. I mean, that's his thing. Is he finds the stories. He gave us the story for Rumble. Not every single one of his picks is going to be like AEHR. I mean, to Ben's credit, he gave us AEHR when it was at like $3, and it's at like 15 now. So
happy.
I gave my criticism of it, saying like I just don't like this play because we've seen this story before. It's not a new story, right? I like the idea of finding a stock or a company with a strong story and investing based off of it, but this story is not new. It's okay. We don't like big tech. We're going to create our own platform, and there's been 5 of these. So I'm going to need to do something. I'm going to need to see something that shows me that Rumble's going to be different from Parler, different from Gab, different, and really attract users. And by the way, anytime if your business model is like predicated or built off of attracting only half of the potential people out there, it's not a strong business, right? Twitter,
Not great.
There's people that are right wing on Twitter. There's people that are left wing. At the bottom line, 100% of people are potential customers for Twitter. Rumble right now seems to really only be trying to court 50% of the population, if that. I would argue it's less than that because it's like more the extreme people on the right, which is probably a lot less than 50%. It's probably like 10% of people want to hear election conspiracies and COVID, all that stuff.
I think you're right. I think with with Rumble, let's just keep an eye on the monthly active users. the MAUs, and let's just see how that trend plays out.
And they're gonna have to report those, correct? Now
Yes,
that they're
sir. Yes, sir.
merging with a SPAC.
Yep, we're gonna have to report that.
Yeah. I'd be surprised if we see that MAU. I mean, what was it? 30 million? That's got to be your whole like alt-right QA base right there.
Well, we'll find out.
I guess we'll find out.
I'm going to quote one of my favorite people, Triple D Trader, and sell the peanuts while the circus is in town. When you get that headline and your stock rips to the moon, it doesn't matter what you think in the long term, in my opinion. It's what's happening right now. And when you're up that much, take some profit, take something off the table, and then maybe look to reinvest when you see a strong pullback after the story settles down.
Hex 14 is talking about DCFC, which is the #1 most searched stock on Benzinga Pro today. It's coming down a little bit, but it's still up. What's that? It's up 82% today.
Yeah, after like a 100% move yesterday. Oh, Christian Gallagher, I'm glad you asked this. So over the weekend, I was out with some peeps having a good time, and I was talking to this guy I'm friends with, and he like me likes to bet on sports. And granted, he had had a few cold beverages. I won't disclose which kind.
Okay.
But he told me
A nice ginger ale.
yeah, some nice ginger ales. He told me if it's sunny out, bet tails. If it's cloudy, bet heads.
This is the best bet I've ever heard in my life.
At the time, it made a lot of sense.
It still makes sense.
Okay, it still makes sense. That was all. I mean, that was enough for me. You know, I was like, you know what? Yeah, it sounds right. So
Did he say why?
I believe he gave
Wait.
some sort of a.
Can you repeat it? I already forgot what it was.
If it's sunny out, which it's LA, so I'm going to assume it's going to be sunny. He said bet tails, which tails never fails.
Wait, it's 6:30. Is the sun still out? 6:30.
No, it's 6:30 Eastern time. It's going to be 3:30.
Okay, true. You're right. Time zone. Okay.
Yeah.
So,
time zones are tough though.
okay, so 6:30. Okay, so if it's heads, if it's sunny out, pick heads,
Yeah.
and if it's cloudy out, pick tails.
And Christian brings up a good point. They're in a dome. SoFi's pretty much a dome. It's not a full dome. I don't even know if it matters if like the sun needs to be hitting the coin. I think it's more of just like an aura, like planets in retrograde type thing. That if it's sunny out, tails is definitively more likely to hit.
Okay.
I don't know.
Okay.
That's just what I heard. Throwing that out there.
All right. I don't hate that logic.
I don't know if he feels the same way after the effects of the ginger ales.
Should we devote Friday's show to just making prop bets? And we have to do our squares. We have to do our squares. Ron, can you throw up the Rocket Mortgage Squares graphic, please? RocketMortgageSquares.com, everyone. Is Ron even here today?
Should we just set up BZB and I can help run it? We'll just do Benzinga bets and then we'll have our own app
we can
and
do
we'll
that.
Compete, we'll compete with
all right, guys.
DraftKings.
There we go.
There's the QR code in the top right. Hit that QR code. Sign up for Rocket Mortgage Squares. It's completely free to sign up. You can win up to $500,000, and you get to use that. It's a mortgage company, so you get to use it toward your home improvements.
That's what they would want.
Mortgages.
I'm a sucker, and I did this just so the chat knows. I did screen.
Well, no, you're a sucker if you don't.
I did this.
It's completely free. Why wouldn't you do it?
Yeah.
I don't know.
You what was Michael Scott's quote? You miss 100% of the shots you don't take.
I think that was
Wayne
that
Gretzky?
was from Michael Scott.
Yeah. It's the same thing. You can't buy a lottery if you don't win. You can't win the $500,000 from Rocket Mortgage if you don't enter.
That's it. That's exactly it.
Yeah, like they say,
That's
luck
simple.
is when preparation meets opportunity, right? So that's the only reason why people are lucky.
There's another quote from someone that was like, I've found that the harder I work, the luckier I become.
Yeah,
I
me
always
too.
like
I've
that.
got that too. I work 3 jobs, so I know what that means.
Wait. Do you know Tiny Pie's the answer to his question, Aaron?
What?
Is it for international people?
I don't know. It's a great question.
I don't know.
Tiny Pie.
I don't know.
If you
man.
need a
Tiny Pie,
find
just-
a VPN.
just email us, Tiny Pie.
Yeah, and I'll answer for you.
Shows at
I'll answer
Benzinga.
for you. I won't tell anyone.
No, we're not going to do that.
Oh.
We're not going to commit fraud. Did you hear about the Formula One thing?
No.
There was
Is your stock already tanking?
There was a charity auction in Formula One. Mercedes auctioned off a tour of their factory, and the head of the Red Bull team won the auction.
Oh.
And they were like, "Yeah, we're not going to let you in our factory.
We're not letting you guys come here and tear
We're
this
not
place
going to
apart.
let you to our factory."
That's awesome. How much did he pay for it?
I don't know.
Did he get his money back or not? That's like when
well, it's a charity, so no.
Roger Goodell did a thing where he was like, I think he was bidding on someone to be able to sit like in his chair to watch a football game with him or something.
Did Portnoy
Yeah,
win?
and Portnoy won, and they were like, "Yeah, we're not doing that." Goodell hates Dave Portnoy,
Oh man.
which I don't like the guy either, but it's kind of funny, you know.
Yeah. It's,
What's wrong with the pizza man?
Oh man, I don't want to get into.
I'm
Well,
sorry.
actually, I will say this. I don't think. I think my problem with it is more that I don't like how certain people like idolize him and put him on this pedestal, and not that I think like, oh, he shouldn't have a platform and be canceled. Like I don't care. Like I don't personally care that he's like 40, you know, it's like he doesn't have to be anyone's role model. Like if he wants to be a 40-year-old that just like travels around and parties and stuff, whatever, that's fine. But the fact that some people like idolize him, and it's like, all right, this guy's like not that cool, you know, it's like, I don't know.
He's just a guy.
He's just a guy. Yeah.
We're all just guys. But I think that once I became, this is just kind of just something I want to spill on, is that I've been on plenty of interviews or been on, live speaking my opinions, things of that nature, just like you guys do. And we're talking about what we do with our real money. And I think that once I got behind the scene of like OBS and understanding like how a studio is run, understanding how to broadcast, understanding how to do what you guys do, things like that, you kind of realize you're like, everybody's just a dude. They're just the women. They're just guys on the news. They're just someone's going home, making some food, hanging with their family and talking about real shit just like they do. But there just happen to be people just look at this TV screen and they're like, oh my God. Look who's on the screen.
Trung fan is a great follow on Twitter. Wait, I think we're being yelled at right now. Are you yelling at us right now? He's yelling at Aaron. Are you getting yelled at right now?
I am.
Why?
I don't know.
He's yelling at me. What? He's pointing at. Someone's pointing at us right now. Anyway, he's very aggressively. Did we do something wrong?
I think he was mad because I like surreptitiously tried to hit my vape on the show.
Oh my God.
Okay. Don't do that, Aaron.
I'm not.
No.
I'm trying to give it to him so it's out of my reach.
You're getting censored right now.
What? No.
Cancel
what was it?
my-
Wait. What was I saying? Trung fan. If you don't follow him on Twitter, you really should. He had a really good thread the other day about he was
Trung Pham is the Riots guy. We've had him on the show before.
Trung fan is a different guy.
Okay.
He was asked this. I guess he put a Twitter thread out a while ago about like it was about Viacom, right? And then he got asked to go on CNBC, and they were like, "Can you comment on somebody buying Viacom?" And he was like, "Well, shit, I don't have an opinion. I guess I got to get an opinion real fast. So let me hit up the old Google machine. Let me Google Viacom, and here's an article that says Amazon can be a takeover. Boom, there's my opinion, and just copy the opinion and yes, everything is noise.
I do like this guy's Twitter.
Everything is noise. Nothing matters. Jesse is frozen. No, he's not. Okay. Sorry. I thought you were frozen, Jesse. Jay Rice, thank you for calling that out. Nautilus, the guest on pre-market prep this morning, Ivan Feinseth, was speculating, he's like, hey, why scoop up Peloton when you can buy Nautilus for like a tenth of the price? What's Nautilus's market cap? $170 million. And what's Peloton's? $12 billion. 170 million versus 12 billion. Anyway,
billion.
the NLS chart. Let's pull that up now. Yeah, look at that new high of the day. Wow, what a 2-day move you've had here in Nautilus. Maybe other people thinking the same thing. Interesting. I'm thinking I have a very small YOLO account. I've thought about adding like some more money to that and just throwing some more YOLO trades out there. Should we just YOLO Nautilus right now? I feel like that'd be a mistake.
Yeah, I think it'd be a mistake too. I think this is a pop to be sold.
Someone asked for Jesse if you could bring up Facebook. Who asked about Facebook?
I actually pulled that up just in case you were to say that.
Yeah,
Facebook.
Facebook and Tesla we were asked about.
So Facebook here is basically, look how far it's come back. I mean, it's only done this. It's only given you this opportunity twice. If you can see the charts over on a weekly chart here, it's going back all the way to 2019, 2021, or sorry, 2020, and then now 2022. Now, is this just, a moment where you're buying a falling knife, I mean, I would say that, but not on Facebook. I mean, I would suggest that if you think that Facebook's going to be around and still continue to grow in the next 10 years, then this could be a good long-term position to get into. Or Meta, I'm sorry. If you think the metaverse is going to be real in the next 15 years, are we going to, that however your sentiment is, or do you think on the other side that they're just old news, that they are the MySpace? They're gonna be MySpaced.
Friendster.
They're gonna be
GeoCities.
Friendstered. They're gonna be Napstered.
Were you ever on MySpace? I was on MySpace.
I was on MySpace. I had a cool hit list. When you got in on my MySpace, you were jamming out to some Sublime.
I could never figure out how to get my page to look all cool. I know, like it was like you had to do HTML, right? You had to like design your.
The way I did it is that I went on and found someone that had that, and then messaged them, and then they sent me some stuff I couldn't understand, and I just implemented it, and it worked, and I just copied theirs.
I could never get my page to look all cool, and so it looked all boring, and I was like, this Facebook is way better because my page looks the same as everyone else's.
And it's cool too, as you get like me on Facebook. This is just a couple things I will talk about Facebook. Just say my ads. So they have, for my company, if you go in Elite Trading on Facebook, Elite Trading Discord on Facebook, search it. You guys hit us that subscriber like. Once we broke 1,000 people, it started being like, hey, you've opened up more opportunities on Facebook, how you can do different things and how you can share your page and promote it and things like you're allowed to promote or charge for like live broadcasting, things of that nature. Just wasn't aware of those things. And then, but now on my ads, before when they would do it, they would just be real simple and kind of silly ads that they would give you for a suggestion, or the words wouldn't be worded correctly. But now it actually takes like a video that I've posted of me and will take what I've said in the video and make it into a really cool headline and decipher it itself and create an ad for you, where all you have to do is just click the button and send it out, and it's already made for you. So I thought that was pretty cool. It was something new that that wasn't nearly as as nice as it is now.
It is their bread and butter. So I would hope they're good at it. And no, Shelly, I did not have emo hair. Come on.
But like my son, he's 13 and does not even have any care in the world about Facebook. When I was 13, I already had one, but I had to have a college, or not 13. But when I was his age, when I was younger, I was like 18. You had to have a college EDU to get Facebook. But
oh really? You were that early that you still needed the college?
Yeah, I
email?
had to have my Cincy my UC email.
Wow.
Oh, you're a Cincy guy. I didn't realize that.
Yeah, I went to.
Did you know Burrow, when he was transferring from OSU, was between Cincy and LSU?
Yeah.
He chose LSU.
He's Ohio State too.
What? Really?
So, yeah.
That's cool. He's an Ohio guy. Do you like Skyline chili?
Great question.
Oh, do I? Sorry. Yes, I love Skyline. I love Skyline. Sorry, I get caught up reading the chat because I like to make sure that we're keeping up with them, because sometimes I'll say stuff that's important in there about the market. But yeah,
what else do I know about Cincinnati?
Extra cheese, and you got to get it when they have the habanero cheese when it comes in town. Sometimes they do habanero cheese mix.
When it comes in
is
town,
delicious. Yes,
it only comes in town like once.
It only comes every now and then. You only get that.
Have you ever had it?
No.
Okay,
I just hear about it.
I had it one time, and I got to say, once was enough.
Really? I was surprised, actually, moving up here to Detroit. I was looking at Skyline locations, and they're not just in Cincinnati. Like, they have a few other locations spread out in different parts of Ohio, Pennsylvania, maybe. I thought there'd be a few in Michigan, but there aren't.
No. I don't know.
He said,
chili with spaghetti.
Said, I feel old. It went from EDU email to Meta.
Yeah. Well, we have where I grew up. I don't know why I said we. Where I grew up in St. Louis, Steak and Shake is a big thing. And
they always, dude, Steak and Shake has 0 line and takes 20 minutes every time I go through the drive-thru. I don't understand it. I protest Steak and Shake.
Yeah. No, I mean, so it was always like 24/7. We'd go and sit in. It was great because you could go at like 2 or 3 in the morning, but 100%. We could be the only people in there with a table of like 4 people, all order the same burger and fries, and it would take an hour. It's part of the experience. But they have a chili mac there that I think is similar to what Skyline is as far as just chili on top of like spaghetti noodles. But I got to try actual Skyline and compare it to the chili mac from Steak and Shake. And also, funny story about Chili Mac, Steak and Shake, and their bad service.
Oh boy.
One time we were there for like an hour, and they finally bring out our food, and I got some of the Chili Mac, which is just, again, chili on spaghetti.
Right.
And the waitress is like dropping out our food. She's like, "Oh yeah, I'll be right back. I just gotta grab your Chili Mac out of the microwave." I was like,
Ew.
I was like, just don't tell me that. I was like, that's fine if you gotta go do that. Just don't tell me that, you know?
Yeah.
Now
Yeah,
you're
I
in
guess
your
I'm-
head like I'm eating microwave chili mac.
Yeah.
Can we just agree that if the Bengals win on Sunday, we're gonna turn the river into Skyline chili?
Oh yeah, I like that.
Just chili everywhere.
I honestly don't know what else I know about. Oh, Harambe. He's kind of making a comeback right now because everyone's talking about Cincinnati.
You know, they did a poll of the tweets, and 33 states are rooting for the Bengals compared to 17 for the Rams. So we are
Yeah.
the nation's team right now.
What?
It's because you have our sympathies.
Yeah,
It's
well,
'cause you're from Cincinnati.
Well, Michigan is probably rooting for LA because of Stafford, or Detroit at least. But I personally am rooting for Cincinnati because I hate the Rams because they left St. Louis, and Stan Kroenke is.
Wait a minute. Sorry, I didn't mean to interrupt
What?
you.
No, go
I
ahead.
just saw this comment from Tiny Pie. Tiny Pie is like over like in Europe, and he knows about Harambe.
Dude,
Harambe.
are you kidding me? It was
Her-
like the
her-
biggest, it's like the biggest meme of all time.
Harambe was global. I didn't realize it was that
Yes,
global.
it was definitely global. Rip
Oh my
Harambe, man.
gosh, I
They
did
have
not
like
realize.
they have like Harambe looking at like people. I was watching one where they have him like in a kind of see-through, and he's like looking over the stadium as we won, and it's, they were like it was for.
Well, going
Harambe.
back to so pardon my take, which is a Barstool podcast, and I know Spencer laughs at me for this because I guess this is like a common thing that people say. I've never heard it, but I say it where I'm like, oh, I'm not really like a Barstool guy, but I listen to Pardon My Take.
Everyone says that.
Like that's like the one, like the thing that content that I consume from them. But they had Sam Hubbard on the DN that's from Cincinnati that plays on the Bengals, and they basically were pressing him about Harambe, and he basically jokingly said like, yeah, we're trying to win it for Harambe, and then every media outlet like Bleacher Report like took it and ran with it, saying like Sam Hubbard says they're winning from Harambe. When you listen to the interview, it's funny because it's like obviously all just in jest joking about it. But what they say on Pardon My Take is for all their social accounts, like from Barstool's social accounts, Twitter, Facebook, Instagram, whatever it is, every time they post a Harambe meme, it does like 20% better than anything else they do.
Wow.
Well,
But yeah, Harambe from Cincinnati.
now you're going to
Jesse.
see stocks with Harambe themed stock people out there trying to boost.
Oh,
their
I
stock.
did see. My friend went to a recreational dispensary here in Detroit the other day, and my friend told me at that dispensary they had they were selling Harambe eighths of weed. And I said to my friend, I said, that's kind of fucked up. They're trying to profit off
It's
of a
Gorilla
tragedy.
Glue. Oh,
Oh,
sorry.
It's just a, you know what it is? It's guerrilla marketing. It's
Guerrilla marketing.
yeah.
So if the Bengals win the Super Bowl, does that mean that I get to drive up to Detroit and do my show between you two?
Yes, 100%.
Sure, man.
Well, you're welcome to do that.
come on
either
up.
way.
Come
but,
on up.
You're
but
actually only
if the
like
Ba-
5 hours away from me, 4 hours away.
If the Bengals win, for sure, yeah. But that wasn't your kid in the Gorilla Pit, was it?
Oh my God, no.
What?
But I do want to go ice skating behind you guys. Every time I see that your guys' show, like I see the
You
people
know what,
back there.
Jesse? You reminded me. We did promise we were going to do a segment from an AB on the street from the rink, and we're running out of time because the rink closes in like I think like end of March, so we don't have that much time. So
Dude, AB, you should definitely do that. I bet the reason why he doesn't is because it's freezing cold in Detroit. But if like in the summer, that would be so great just to walk around, just ask people random stock questions, and just be like, "Hey, like, do
Yeah.
you trade in the market?" And they're going to be like, "What's trading?" You know, a lot of people will
Yeah.
like trade what.
That's the idea. We haven't been able to make one of those videos just because there's not a lot of like foot traffic.
there's no one out here.
There's not foot traffic outside when it's so cold. So we're thinking of alternate, like maybe we go to a mall and do it while it's cold out, or maybe we. I'm trying to work through some like press connects and whatnot to get a press pass for the All-Star game in Cleveland, NBA All-Star game. So it'd be cool to make some of those videos there.
Before we wrap it up here with Jesse on the topic of the Super Bowl and all that, we joked about we joked with our last guest Ben just about all these stocks that could have Super Bowl commercials, and you know if there's a next day, a day after pop, that's probably like not going to happen with stocks. But you know where it could happen seriously is with NFTs. Okay, there is a lot of celebrities that are all up in the NFT thing right now. Like the level of endorsement is growing exponential. I think there's a very real possibility that we see a serious like day after move and a lot of like random crypto and NFT projects that get mentioned on Sunday.
TKAT.
How is that doing? I forgot about that one. But my point in bringing this
up, that's a good reason to look at them. If you forget about them and it gets off a radar of people who are watching, that's when you're like, oh crap, I forgot about that one. It might pop and look at it.
My point in bringing that up though was mostly to say that I don't know what projects have already announced they have commercials going. I'm sure Bored Apes have a commercial, but you know who does know is the guys on the roadmap, which is our very next show at 2 p.m. Eastern time. They are going to be talking about all the projects that have announced commercials on Sunday and very well could have next day pops. So check out the roadmap coming up right after this show, 2:00 Eastern time. They're going to preview the NFTs that will be mentioned during the Super Bowl, during commercials that have celebrity endorsements. And in my opinion here, there's probably more of a trade. There's more of a Super Bowl trade for NFTs than there is for stocks. Stocks is that's not a trade to me, but NFTs is a trade for me. Grandpa watching the game is going to see,
that his son or whoever's been talking about this. He's like, it's real.
Exactly.
It was on the Super Bowl. It must be real.
Exactly.
Hey, now I'm going to end this on the halftime show. They did it wrong if they don't bring out a hologram performing version of Tupac Shakur when they have Dr. Dre and Eminem.
They very well might.
That would be
they
amazing.
Well might. And the other guy. The other guy. That's so bad. What's his name from?
Biggie.
No. The guy from NWA. What was his name?
The
guy who died.
Easy.
Easy. Thank you.
Yeah.
Dear Lord, that was bad. It's not my day.
Woke
today.
up quick. Sorry.
That's it. At around noon. Jesse Kaler runs Elite Trading. Check him out there, Jesse. The next time we talk to you,
we'll be Super Bowl champions. Stay blessed. Stay green. I'll talk to you soon.
All right, how's it going, Jesse? Thank you to everyone in the chat, to Tomo and Happy and everyone for Christian. Yeah, Easy E. Forgot the guy's name. AB just had to go answer the phone, but he's back now, so I missed him, man. Anyway, it's 1:40. We got 20 minutes left in the show, and there's still a few things that were on our list to get to. So first things first, we did a crypto update. We did the Super Bowl squares. But yesterday, Aaron, we were going to talk about the 7 stocks that Bill Ackman owns. And we didn't get around to it. We totally forgot. So can we do that right now?
Yes.
Okay. Let's pull up the 7 stocks. And it's surprising. The reason that it caught our eye was because you think, oh, Bill Ackman, big hedge fund guy, owns lots of stocks. Nope. Only has like 7.
Yeah, and this isn't, that out there in terms of how some people manage money, right? If you recall, a few years ago, it was Michael Cohen that had famously his entire net worth in 2 stocks. It was Apple and Wells Fargo.
No, that wasn't.
Or Michael Burry. It was either Michael Burry or Michael Cohen.
No, it was Ryan Cohen.
What'd I say?
You said Michael Cohen.
Who's Michael Cohen?
He's Trump's lawyer.
I meant what's his name? Ryan Cohen? The
Cohen.
GameStop guy.
Ryan Cohen.
The Chewy guy.
It was Apple and Wells Fargo. The Chewy guy, Ryan Cohen.
Yeah.
Yeah.
You knew who I was talking about.
I did.
A Cohen's a Cohen.
I did, but you said Michael.
Steve Cohen, Michael Cohen, Ryan Cohen.
Not the same. Anyway, Ryan Cohen. You're right. He owned 2 stocks.
Yeah. All right. So here, and this is from hedgefollow.com, which, as you can guess, follows hedge funds. Pershing Capital Management Holdings heat map. Lowe's. They own $2 billion worth of Lowe's. Chipotle. $2 billion worth of Chipotle. QSR, which is
quick service restaurants, i.e. Burger King and Tim Hortons are the 2.
So you can see between CMG and QSR, he likes that space, and DPZ, which is
Domino's.
HLT, which is
Hilton. He likes hotels.
He likes hotels, and
That's
HHC.
That's Howard Hughes Corporation. That's like an industrial.
Okay. So what's missing from here is like
Everything else.
tech, right?
Yeah. Yeah, but this is a hedge fund. Hedge funds.
Oh, and it says he's got. Oh well, nope. He sold all his.
Hedge funds have one job, and that is to provide you hedging exposure to the rest of your portfolio. In theory, right? So that's Bill Ackman's job, is to generate returns in all environments and to hedge against the broader movements of the market. Full disclosure now, these are his holdings as of the end of
This isn't real time. Which
the third quarter.
you
but
mentioned
next week.
yesterday. When is 13F day?
Next week. We're going to know this table will be updated next week with his holdings as of the end of the year. This actually, I think that is a bigger problem than like if you had to like if I got to like prioritize all like the changes that we can make to Wall Street, I would put make hedge funds disclose trades in real time. I'd put that ahead of Congress if it were me. I would make like
I don't know.
like the fact that we like because there are thousands of hedge funds out there managing billions and billions of dollars, making big trades every single day, as opposed to like a couple hundred Congress people who frankly like probably don't know. I mean, they may know inside information, but like they may not. I would rather see what the whales are doing in real time, or like maybe like on the next day. But to have a 45-day grace period, a 45-day grace period.
But then you're talking about these guys having even more influence than they already do. Exactly. Shelly's saying we could just copy. So if we all saw in real time that Warren Buffett just bought McDonald's, and then we all go out and buy McDonald's, and it goes up 5%, and then he's like, "Oh shit, I just got the 5% return I was looking for."
It wouldn't necessarily do that, but what it would do, I think, is it would give more transparency as to like why a big move already happened. So, for example, Viacom and Discovery last year, right? Bill Wang, blew Archegos, right? Blew up his fund. Had like 100-to-1 leverage on Viacom, and if you pull up the charts, you'll see it. And I remember the entire way up on Viacom. I'm gonna bring up the chart right now. On Viacom, I was like, I don't understand it. This makes no sense. I had guests on the shows. They're like, I don't get out of this. The move makes no sense. It turns out the whole reason for that move in Viacom was Bill Wang is like a gajillion-to-1 leverage. And when he blew up, the stock collapsed. And we had no transparency in that because he was using swaps and derivatives to mask his position. If we had more transparency into what the whales were doing, that would prevent a Viacom situation. Like it is not Viacom's fault that some guy was levered like up to his eyeballs and then blew up his fund and crashed the stock. Right? We need more real-time transparency. I think so. That's my take. I think if we got to see what the big fish were doing, not necessarily real time, but like closer to real time, that would be great. That's all I was saying.
Well, I will say we've seen a move more toward that, at least in maybe less hedge funds, more just fund managers in general. Because after Cathie Wood and Art kind of popularized that, a lot of other, even like JP Morgan put out transparency, whatever, where every single move is sent out that night. But I just think that if there would be consequences to that as well, if in real time every big move by Ryan Cohen or Warren Buffett or Michael Burry was out there.
I just think it's and they're not even required to disclose options positions. Well, I think now they are, but they weren't before. There's no transparency here. I think like I'd rather know what the big fish are doing than what Congress people may or may not be doing. But again, they're both problems. We need both things to change. But if it were up to me, if I was the king, I would say more transparency from the hedge funds. Then we crack down on Congress trading stocks if there were me. But they're both issues. I'm not trying to say.
Well, I was reading about it last night. What's interesting is so again the idea of banning congressmen and other lawmakers from trading stocks was
Yeah.
once kind of just like a fringe issue on one side, and
Yeah.
now there have been parties from both sides that have said, okay, this is a problem. The guy from there's been a number of different lawmakers that have brought forth different bills, and
Yeah. Well, AOC came out and against it, and when she came out against it, that was when I saw that I was like, oh great, that means it's gonna get no traction now. She came
yeah,
out
exactly.
against
So it was a fringe issue for
Yeah.
progressives, and then some people, obviously Nancy Pelosi's been like the biggest story from it. But looking at this, these are the members of Congress that beat SPY in 2021. This comes from our friend over at Unusual Whales. Nancy Pelosi is sixth, so she's done very well. But there are 5 other lawmakers who have done even better in terms of return. And yeah, I mean, there's some names, probably because most of these names up at the top aren't that notable, other than Dan Crenshaw is pretty big, eye patch dude. So, yeah, I mean, it makes sense why Nancy Pelosi's probably, because she's probably the most prominent figure on this list. Tommy Tuberville, you know who that is, right?
The fact that Tommy Tuberville is in Congress still blows my mind.
Yeah, he's a football coach.
Guy's a football coach.
I mean, shoot, just goes to show you, especially in the SEC, if you go to a school and you coach well enough, you're going to be pretty popular.
Did he even win that much? I don't even think he won that much. Whatever.
And no, I don't think so.
He won an election. That's what matters.
But yeah, the main difference in a number of these bills is what then it allows. Some of the bills say that the elected officials should sell their stocks they hold already. Some don't go that far and just say they shouldn't be able to buy more. They can buy into a blind trust, essentially. So, and that's what's kind of silly, though, is what if they do come to that conclusion that they can invest in a blind trust, but not like individual companies.
Yeah.
I mean, the blind trust is going to hold.
Well, that's what presidents do. Like the presidents, they have all their assets thrown into a blind trust.
So why would that be the standard for presidents?
Because life does not make sense.
Yeah.
Yeah. I can't even believe that Federal Reserve members were allowed to trade. When I found that out, my mind was blown because like Congress people don't have the cachet to move the market. I mean, maybe a couple of them do, but most of them don't. But anything that a Fed governor says is liable to move the market. Anytime they open their mouth, they can move the market. And that kind of power, like, is incredible to have. They should. When I found out that Fed governors.
How far can that go? Can Federal Reserve members like buy puts?
Well, they can't.
Well, they can't anymore.
They can't anymore. But the fact that they could, like, blew my freaking mind. I was like, "What are we doing here? Trading against Jerome Powell? What chance do I have?" Anyway.
That's a good question.
Yeah. Okay, so here's what. So we did the Bill Ackman thing. The bottom line is he owns 7 stocks. We'll find out what he did last quarter next week.
Food and value stocks. I mean, Lowe's, Lowe's, Domino's Pizza.
Yeah, he's been at Chipotle for a while. He's been on that Chipotle train for years. And Howard Hughes. He's owned Howard Hughes for a very long time. So yeah. You know what I miss? Bill Ackman waged a several years long short campaign against Herbalife. I miss those like activist short sellers that would like how do I put this? I miss when these firms would like these big hedge funds would make public presentations. Like short sellers make public presentations all the time, but I miss when like the big hedge funds, like the Ackmans of the world, would release these presentations about why a stock is a good long or a short. Like yesterday, that firm that owns a piece of Peloton, and they've been advocating for corporate change, for the CEO to step down and for someone to buy Peloton. They released their slide deck on Peloton and why the CEO has been doing a bad job and why they need to like get some new blood in there. But I feel like hedge funds don't make those things public as much as they used to. I would love to see more like in slide decks from hedge funds, like, oh, this company sucks or this company's amazing.
Yeah, and I mean, maybe it's just like it looks different now. Like obviously with Edwin Dorsey in the Bear Cave, he sends out a Substack to
Yeah, but those are all like smaller. I miss when like the big guys would do it.
Yeah.
I miss when like Acme.
I wonder if it's just different because Herbalife was so big and affected like so
Maybe.
many people that it warranted it.
I don't know. I also saw that headline, Corey, the T+2 to T+1 thing. Call me when the comment period is over, and then we can talk about that because I imagine they're going to get a lot of feedback on that. So.
I don't even know what you guys are talking about. So
there was a new rule proposed. You know how when you buy a stock, it doesn't settle for 2 days,
yeah.
right? There is a rule to shorten that to 1 day.
Okay.
So when you buy a stock, the trade actually settles in your account the very next trading day.
You know what I thought?
Which would be cool.
Which I don't know if we've discussed this on the show, but I don't know why, but I've been going through this like kind of macro econ like rabbit hole recently.
Yeah, I can tell.
Yeah, I'm sure it's probably very annoying. But you know that graph that everyone shows of like the M2 money supply or whatever that just showed?
I think it's M1.
Or M1.
Yeah.
Well, there was a rule that was changed that made it was essentially all money that's sitting in any savings account in the U.S. used to not count toward M1 supply, and then they changed it toward it does at that time, like the beginning of COVID. So it totally threw off the data. It wasn't as it's like we still added a lot of money to the money supply, 100%.
Not as much as it would indicate, though.
Exactly.
I don't do it.
Yeah.
I know it's been on my to-do list to look at M1 money supply and like understand that for a long time. I haven't gotten around to it yet. But anyway, hey, it's Wednesday. We do a guess that chart segment every single week. I don't know if we're gonna have time to do it. Well, we're not gonna have time to do it tomorrow. And I don't know if we're gonna have time to do it Friday either. So do you want to do one right now?
Yeah. I also played Wordle. I don't know if you have today.
Actually, I started and I didn't finish.
Oh wow!
I'm on my second guess.
It took me it only took me 4 guesses, but I spent a lot of time.
I'm on my second Wordle guess right now. I have U in the right spot and I have O in the wrong spot, and that's all I know. So, well, let's do a guess that chart segment though. Give me a minute here to find a chart to bring up.
Wait, Herbalife is still a stock?
Yeah.
Really?
Yeah.
I thought once they were exposed as like a pyramid scheme, they just kind of...
No, that's the thing. It's the beauty of the market. Is there a pyramid scheme and there's still a stock?
Wait, it has to be different now.
No.
It's the same thing.
It's the same thing. I watched the documentary and I read the book.
Oh, yeah.
Scott Wapner wrote a book about this called When Wolves Bite, I think. It's all about the Bill Ackman, Carl Icahn, Herbalife saga.
That's not what the movie's called.
No, it's a documentary.
I know, but I've seen it, but I know what's it called.
I don't know what it's called, but Scott Wapner wrote a book about this. It was pretty good actually. It's a nice, easy read. A nice, easy
Betting on zero.
Right, nice, easy weekend read.
Because he was short in it.
Herbalife's still around, man. Still a pyramid scheme. Still around. Kind of crazy, right?
I wonder. I would love to have someone on the show or like to just talk to someone who's actually shorted a stock to zero. Like been in it for the long run.
We can ask Whitney Tilson about that. He is shorted. I think it was Lehman or Bear Stearns, and he didn't cover for years. Like he didn't cover for like 5 years after the fact, and he wrote about how hard it was.
Oh, here I actually have one more
to cover his stock, to cover his short.
We can go over analyst ratings. We only have 5 minutes left of the show, Eric, right now. But tomorrow. We're live every day from 11:30 a.m. Eastern to 2 p.m. Eastern. We can go over some analyst ratings tomorrow for sure.
All right.
I just don't think analyst ratings are like that great to go off of in terms of like what to buy, what to sell.
Well, the thing is their importance changes with the market. If the market's super quiet and nothing's going on, analysts will move stocks. But if there's a lot of shit going on right now, then analysts take a back seat.
All right, well, you're getting your guess the chart ready.
Yeah.
I'm going to show you this. This
Doing
comes
that right
from
now.
Twitter. His handle is Chicago Advisor. $10,000 invested in Monster 30 years ago would be worth $27 million today.
I also saw that tweet.
These are the historic declines you would have had to endure. So ask yourself right now, if you put maybe 10,000 or say just $1,000 into a stock, would you be able to sit through some of these declines?
No.
Right off the bat, 40%. Okay, then it comes back up. Back down to 40%. Now you're down 60%. At one point, 4 years into your investment, you're down 88%. So out of 10,000, you're left with, I don't know, 1,200. You're left with $1,200 out of 10,000. Then it comes all the way back down to 56%. Even
Investing is hard, is the bottom line.
yeah.
All right. I have our guess that chart ready, but let me pull up a daily. Don't share my screen right now. I'm gonna get it up just like that. Bada bing, bada boom. All right. This is
Robin's asking, what will happen to Meta? I hold it for long term. I'm scared. Don't want to liquidate it though. I don't know. I mean, you can always trim a position. You don't have to go all one way or the other.
You can always hedge it. You can always buy some long-term put options or sell some calls against it to profit off of downside if you're worried. I haven't wanted to own this stock for
Yeah, I was going to say, bottom line
years.
is there are more interesting investment opportunities out there.
Yeah.
There are a lot of interesting investment opportunities out there. And Meta's not one.
Robin, if you're losing sleep over this, then sell a piece.
All right.
All right, this is today's Guess That Stock. The hint is that they are on the earnings calendar. I'll give you a couple hints. They're on the earnings calendar for this week. They will report later on this week. This is a stock that I sometimes forget is public. I think it's a relatively recent. I think like in the last 5 years they IPO'd. Let me give you like the industry that they're in. Because I'm not really sure how I would describe the industry. I guess I would say it's like an internet company. Internet, if that makes sense. It's a digital content company. If that makes sense, if that's helpful at all. Let's go to the chat. First person who gets this wins some free swag. This one's a little bit tougher.
Ooh, Jay Rice actually has a decent idea with Facebook too. Hold it, but use yesterday's low as a stop.
It's not bad.
So then you can ride if it does reverse from here.
Wow. Hex 214 Pony nailed it. Did you cheat somehow? I feel like you must have cheated.
I don't know how you.
Wait. How do you get Shutterstock? How do you get Shutterstock? It's such like a not talked about stock. SSTK. Anyway, congrats, Hex 214 Pony. I think you've won before, but actually I don't know if he's won before. Email us, shows@benzinga.com. Wow. That was impressive. I'm very impressed. Email us, shows@benzinga.com. Hey guys, by the way, I've been saying this on pre-market prep, but if you see a fake Benzinga in the wild, please email us. Okay? Email us at scamreports@benzinga.com. Also, check out Benzinga Pro. Seriously, do it. pro.benzinga.com. Free 2-week trial for everything. Oh, Tiny Pie is accusing X214. I don't know. Hey, Chaji says he got your hoodie yesterday and got his mug on Friday. Awesome.
Wow.
Great to see it.
I guess sometimes swag does
Sometimes it does show up.
All
right.
Also on the roadmap,
I plugged it while you were gone.
Oh.
Yeah. No, seriously. Like the after Super Bowl trade for stocks ain't a thing. Well, for NFTs, it's gonna happen. I'm calling it now. There will be crazy action on Monday in NFT land, but I don't know who's gonna get who has a commercial. The roadmap guys do. They're gonna talk about it right now. Coming up live after this show. We'll redirect to those guys. So we're off. We made it. Everyone have a great rest of your day, and we'll talk to you guys later. Check out Benzinga Pro.
Did you know nearly all stock price changes of 10% or more result from a single news headline? That's right. News headlines have a unique ability to drive stock prices up or down. These news catalysts create trading opportunities every day. All you need is a little help to reach out and take them. And if you're looking to grow your portfolio, it doesn't matter if your investment budget is small or big. An easy-to-read stream of news headlines will increase your opportunities to profit from price changes in the stock market, consolidate a knowledge-based investment strategy, and grow your portfolio. All you need is Benzinga Pro and its powerful news alerts, price tracking, and portfolio monitoring to make a positive change in your trading performance. We've already helped thousands of retail traders across the world, and they could not be happier. Increase your market knowledge, boost your exposure to big movers, and make informed trades before major price changes. The opportunities are all around you. Subscribe now, and we'll skyrocket your portfolio